All right. Hello, everybody. Welcome back to another episode of the Market Close. I don't understand why there's 500 comments of saying I'm late. Literally at 3:45. I know it's 3:46 because I literally went live 10 seconds ago, so it ended up being 3:46. But you don't even give someone a chance to be on time. Like, if they're not early, they're late. That is what being on time to you guys consists of. If they're not early, they are late. But we're live, we're here, and we got a lot to talk about. Folks, thank you everybody for being here. We will have Technical Tuesday today in about 30 minutes, 4:20-ish, 4:15-ish. Jason will be on. So we will have a full-on session of Technical Tuesday. It's been about a couple weeks since we've had it, and that's because we've had big tech earnings. So now that all those earnings are done, very excited to go through a lot of these numbers. What is happening in the markets today? We got a lot of different headlines. You know, it's actually quite interesting. S&P 500 is green, meaning the broader market is green, 682.97. What's red? Well, pretty much all the data center plays. I mean, data center plays absolutely getting wrecked today, as you can see right here on the screen. Hive down 2, Wolf down 14, CleanSpark down 6, IREN down 5, Cypher down 6, NBIS down 9. About to go below 100. 98 was the support on October 2020, on October 22nd. So if it violates that 98, you will be getting a new 3-week low. Galaxy right there down 3. CoreWeave getting hit the worst, down 15%. And then Applied Digital down 8%. Couple reasons why I think the data center plays are getting hit today. Number one, and we've been talking about this over the past couple of days, there is a little bit more concern around the debt load that these companies are taking on. And CoreWeave yesterday on their earnings call, for those that listen, they really, made it very clear that they're going to be financing a lot of more activities through debt. Oracle, one of the larger cloud computing players, that is also down 2% of the day, back down from 350 to 235, likely because of what we've got in regards to corporate debt becoming more of an issue. Having said that, I don't think it's just the debt profile of a lot of these companies that do indeed have debt and will engage in dilution. Again, a lot of that dilution could be accretive if that dilution is going to be good enough to be able to generate an ROI, given that they're expanding data center capacity. One of the things that NBIS said today was that they sold as much capacity as they possibly had. The Meta $3 billion deal, quite frankly, based on what NBIS said, would have been a lot larger. It's just they didn't have more capacity to give out to the hyperscalers. That shows me that demand is not a problem. And based on what Lisa Su said, which we'll look at in a second, she had her AMD Investor Day. That was a very big deal in terms of the numbers she put out there. I think it's not just that much about debt. I think it's also about this trade is just getting crowded and people got kind of tired of it. And quite frankly, as someone who wants to actually establish a real position in NBIS, I like it. I think it's healthy for a lot of these plays to just take a breather, especially if there's not a fundamental reason why I think these plays are getting hit. Now, CoreWeave, you could speak to some of the fundamentals around their debt load. NBIS, I'm sure there's some red flags that people could find out in the earnings. Overall, I didn't see too many, but I understand the stock being down 9%. Rocket Lab had a phenomenal earnings. That stock was up 12%. Now it's back down. You might be seeing a little bit of a broadening out trade in the broader market, given the S&P 500 is green, but a lot of the tech names are red, which I thought was pretty fascinating. S&P was red most of the day, and it kind of just flipped green about 20 minutes ago. But NVIDIA's down 3%. I mean, NBIS and Cypher and Wolf are not going up on a day when NVIDIA's down 3%. Same when AMD is down 2.5%, and we'll talk about AMD in a second. Google ended up going green right here at 291, and Amazon as well at 249. This is a flight to safety. It might be a flight to safety. You got Palantir down, Tesla down, NVIDIA down, Hood down. Now, they're not all down some dramatic amounts, 7-8%. They're down 1 to 3%. The data center players are the ones that are getting hit most. And I think that's where you might be seeing a little bit more of a flight to safety of people just saying, you know what, I have enough profits in this stock or in these basket of stocks, and therefore I don't need to continue doubling down on these names. So I don't know what the sort of fundamental argument would be for why some of these names are down. Maybe the NVIDIA headline is spooking people. The idea that SoftBank sold some of their stake. We talked about that in the morning. What did SoftBank say they're going to do with their $6 billion of NVIDIA? They're going to give it to OpenAI, which is going to buy more NVIDIA chips, which is going to have to use more hyperscalers to get more NeoClouds deals to be able to prop up the entire data center ecosystem. So it's not really net bearish. I just think the trade got a little fatigued today. And as a result, you're seeing a flushing out, which I think is actually pretty damn healthy. Having said that, the net bullish sentiment should be long on a lot of the stuff, because here's what Lisa Su said today at her Investor Day.
Now, as exciting as the data center AI revenue opportunity is for us, the other message that we want to leave you with today is every other part of our business is firing on all cylinders. And that's actually a very nice place to be. Some of the other key targets that we're going to talk about today are areas where we think we have the ability to grow significantly ahead of the market dynamics. So on the server side, Dan McNamara is going to show you, sitting currently at approximately 40% share, we have a clear path to over 50% revenue share of the server market over a larger TAM over the next 3 to 5 years. Jack will talk about our client revenue market share. We're sitting, let's call it, in the high 20s right now. Again, a clear path to over 40% client revenue market share in this 3 to 5 year time frame. And then Salil will talk about
the 70% adaptive revenue market share is the last thing that she's talking about. And I mean, it's pretty damn incredible. So basically, Lisa Su said demand for AI computing infrastructure remains extremely high. Customers are not reducing their investments in AI. AMD is projecting annual revenue growth of 35% over the next 3 to 5 years. Again, one of the biggest knocks on them in Q2 was that they were growing at 22, 23%, data centers at 14%. So they pretty much upped the ante on the expectations, which is pretty much what every analyst wanted to hear. And they're forecasting data center growth exceeding 80% CAGR. So again, when you see stuff like this, and there was a lot of other tidbits that Lisa Su had to say, but they did not disappoint in terms of the level of excitement that they brought to the overall data center thesis as more and more demand for AI compute infrastructure continues to remain high. Now, the stock being down today, again, I think that is a function of NVIDIA being down, the broader market kind of consolidating a little bit. One thing to also remember is today is Veterans Day, right? So you have the credit markets that are closed, which means across the board, you've been seeing low volume. You could have a lot of different hedge fund managers going back and forth in terms of names they're getting in and out of due to the lack of volatility and due to the lack of volume today. So tomorrow potentially is a different story, but there's not a crazy macro headline that I saw today from Trump or that I saw from the data centers that would be causing a little bit of the AI trade to be in question. And then again, you got Amazon and Google that are definitely big parts of the AI trade. Those are green today. NVIDIA down 3%. NVIDIA was up 6% yesterday. So it's one of those days where there's not a lot of explanation for it, but I do think it is healthy because, IREN at 80 a couple of days ago probably was getting ahead of itself. IREN at 57. I don't know if that's the best deal, but that's definitely a better deal than this stock running to 80 for, one could argue no reason. Same thing with NBIS going up to 130, 140. It's like now that's down back to 100 seems a lot more reasonable. CRWV, again, probably more of a fundamental reason, got some downgrades today, but that stock plagued with a lot of debt. And that's why that one is down 16%. Ethereum, this one has also been relatively quiet today, 3,400. Same thing with Bitcoin, nothing too crazy. I mean, well, now it's down below 103. It was at 105 in the morning, 102.7. Ethereum and Bitcoin not really making that big of a move. Bitmine is back down below 40 because Ethereum continues to take a hit. And MicroStrategy at 231, that's down another 3% on the day. Same thing with Hood, same thing with Coinbase. A lot of the crypto derivatives or data center derivatives plays did get hit. ASTS actually got a Bank of America $85 price target. I think they reiterated their buy in $85 price target, but even ASTS after those earnings is flat on the day. Palo Alto's up a little bit. Enphase down 6% on the day. Circle down 5%. Another crypto play at $98. That's now below 100. S&P still green, 683 right there on the S&P, actually pumping as we get into the close, which quite frankly means has to be a bit of a rotation. We do have Oklo earnings after the bell that we'll look at. And this is your rotation. Take a look at this. So consumer defensives like a Walmart are green. Healthcare like a Eli Lilly, all-time highs today. J&J, AbbVie, that's up. And then you got tech and semiconductors that are down. So yesterday, this was kind of the opposite. Walmart was down, Lilly was down, and NVIDIA was literally going to the moon. And today kind of had a reversal, which means all the data center plays, crypto plays that are attached to a lot of the big tech names associated in that space, they're also going to take some of those companies to go down as well. So, I mean, it's just one of those days. Nothing too crazy. There's not a lot of headlines. We talked in the morning. Oh, I do have one thing for you guys. We talked about Trump's tweets in the morning about the Supreme Court. Again, it's just not looking pretty for this. Importers today said, so one of the core arguments I said for why the Supreme Court would not overturn the Trump tariffs is because they would be practical and say, hey, if we did this, all this money would have to be reversed. Like, that's probably not something we want to cause. We have to think about ultimately the practicality of us making this decision. Today, American importers said that if the Supreme Court rules that the money they have paid for President Trump's tariffs must be repaid, it would be simple to do so. They said importers pointed to paperwork that clearly details the tariffs they pay on goods brought into the US, and it would be very easy to refund the money. So every time you think maybe the Supreme Court would go in the opposite direction, now even the people having to pay back the money, they're saying, to be honest, it wouldn't be that hard. It would be pretty easy, which is not good for Trump. And then you have CNBC reporting that during oral arguments last Wednesday for a case that will decide the fate of Trump's tariffs, most Supreme Court justices expressed skepticism that the duties were legal. And so I think we're going to have to see how this ends up playing out. Obviously, it could be pretty dramatic if we do have to end up paying a lot of that money. Tesla, by the way, trying to go green into the close, 440. It was at 432 today. You're getting a bit of a green candle. Same thing with Palantir, getting a green candle right there as well, 191. SOFI has been pretty green all day, 30.91. They are bringing crypto back to the platform. But obviously, the tariff saga will continue as we get towards the end of the day. Oh, we got a Wall Street Journal headline. Oh, boy. What is this? Fannie Mae probed how Pulte obtained mortgage records of key Democrats. FHFA's acting inspector general handed probe report to U.S. Attorney Office that it indicted New York Attorney General Letitia James. Oh boy, this is. I was wondering how he obtained those records as well. I think all of us were wondering how that was happening. Fannie's Ethics and Investigation Group had received internal complaints alleging senior officials had improperly directed staff to access the mortgage documents of James and others, according to the People. All right, I'll dive deeper into this story. I'm just getting the headline right now. Let's get an update on the shutdown, but that just broke. We have some other updates on Fannie Mae as well in terms of how they're thinking of making mortgages more affordable for people. And we'll go through that headline in a second. It actually has to do not with a 50-year mortgage, but more with credit ratings.
Hey, Scott. Well, yeah, House members, look, right now they are making their way back to D.C. for the first time in more than 50 days to vote tomorrow afternoon to reopen the government. We're expecting that around 4 p.m., might be a little later. And look, if there's any sign that this will not pass, we haven't seen it yet. It seems full speed ahead. Granted, Republicans, they can only afford to lose 2 members, but that's what they lost last time. And remember, they actually had 1 Democrat join them. And Trump has already congratulated Republicans on reopening the government. So again, lots of momentum there in this getting done tomorrow, which means we're now looking ahead. The Senate is now trying to see if there is any path on extending those Affordable Care Act tax credits. But Republicans are eyeing bigger changes to Obama's signature health care law. Republican Senator Eric Schmidt said part of the goal would be to find a way to limit the funds that can go to insurance companies.
Okay, so it looks like the House is going to take a vote tomorrow. That vote's going to be really important. The Republicans really don't have any votes to lose, so they've got to be able to get as many votes as they can. And if that's the case, then maybe the government reopens by the end of the week. That could obviously be a tailwind for the broader macro. Maybe that's also why the S&P is getting a little bit of a pump right here at 682. But it is nice to see that the government reopening could happen by the end of the week. And if that happens, that would obviously be pretty bullish. Yes, I wish they were voting today, but at least if they vote by tomorrow, then you're going to have some more momentum to get us open. AppLovin right here, down 9% on the day. This one getting hit. Enphase down 6. Oklo has earnings in the next 10 minutes. Do we get them at 4? Do we get them at 4:10? We got about 40 seconds until the market closes. I think we get them at like around 4:05. Again, Street's expecting 0 revenue and 0 EPR. I think they're expecting them to lose like 17 cents a share. I'll get the exact numbers in a second. Oklo right here, down 6%. Pretty much all the momentum names. High beta momentum. If you've been running up over the past couple of months, you are getting hit today. I think that's okay. I think that's also really healthy with the S&P green, but a lot of those momentum names down. And a lot of that's probably creating a lot more consolidation for the market to be able to figure out what names deserve that capital. So we will get those Oklo results soon. And then in about 20 minutes, Jason will be on. And we will get into Technical Tuesday for the first time after a couple weeks. Thank you, everybody, for being here. It is Tuesday, November 11th, 4 p.m. The stock market is now closed. All right, we're done for the day. We ended green on the S&P, even if the broader market, or at least players in the market, specifically in tech, ended red. But at least we are green on the S&P, which is nice to see, 682. By the way, Street's expecting 0 of revenue and negative 13 cents of EPS. So, I mean, honestly, if Oklo sold like some t-shirts, they might be able to bring in a little bit more than 0 in revenue. But we're going to find out. Oh, I should do a pump or dump in the chat. What do we think Honestly, I have no clue. Oklo is down from 193. So, like, sure, you could say dump, but then again, it's down a lot. And there could be an argument that, you know, any bullish piece of news brings it higher. But we will find out soon. Oklo, pump or dump, what are people thinking? S&P 500, 682. NVIDIA, down 3% of the day. Tesla, down 1%. Palantir, down 1.35. Hoodie, down 3%. SoFi, actually up 1.2%. Google, back above the 290s. Grab, flat on the day at 590. Reddit at 208. Meta, 627. Amazon at 249. Salesforce up about 1%. Then PayPal, up about 2% of the day. Bitcoin right here at 102.7. Ethereum at 34.34. That's why BMNR is below 40 at 39.56. CrowdStrike flat on the day. Coinbase down 4%. And then CoreWeave, just ugly day for CoreWeave, down 16%. There's got to be something else in the earnings outside of that fourth quarter delay and the debt stuff that's getting the street to be upset. But nonetheless, that's getting hit. NBIS 102.35 got a little bit of a bounce off 100. It did hit 99.83. It did hit 99.83, bounced off 99. 98 was the low a couple weeks ago. So if it gets past 98, we would be interested to see what the new lows would be, potentially 94, given that's where it was on October 17th. IREN, this one also 57.52, a little bit of a bounce at the close as well, down about 4% of the day. And then Cypher down 5% on the day as well. Oklo earnings are out. What do we got for Oklo? Stock is up a little bit after hours. You see that green candle. No revenue. And they lost 20 cents a share instead of 13 cents a share. They missed by 54% on EPS. They missed by 54% on EPS and no revenue. Stock's green. You got a stock that's green, baby. Oklo, 0.48%. It was up 2% at one point. We'll see if that holds. What did you guys say in the chat? Say pump or dump? 75% said dump. All right, so we'll see if this one ends up dumping. Damn, did they miss by 54%? 20 cents a share of a loss. I think there's a bright future for nuclear energy in this country, and I think there's a lot of need for nuclear energy via AI. I just, do you give a company this much market cap for not really executing on any of it yet? That's the broader question. Now you're seeing a little bit of a dump after hours. Oklo down about 0.75%. As that one goes red. I think that's pretty much the only earnings we have today, right? It's Oklo and, or do we have any other earnings? We had NBIS in the morning, C Limited in the morning. I think that's pretty much it. It's pretty much Oklo. Oklo right there at 103.50 after hours, and that's what we got. S&P still green, NVIDIA down about 2.9, Grab again flat, and then Uber right here flat as well in the day. Circle's today? No, Circle's not today. Circle is Circle's tomorrow morning. Circle's tomorrow morning. So is Delo. Delo's tomorrow morning as well, or tomorrow afternoon. So that's what you got on Oklo. That's what you got on Oklo. Missed by 54%, in line with expectations. All right, so we'll have Jason on in about 15 minutes. I want to talk a little bit more about this AI debt trade that's creating some fear. And quite frankly, this could also be why a lot of the data center plays took a little bit of a hit. But here's a little bit of coverage on that. Oklo now starting to get a little bit more of a dump. And then we'll keep going from there.
AI is still the market's favorite.
Let me just pull this up. Okay.
Trade, but cracks are starting to show. You mentioned some of them. SoftBank cashing out on NVIDIA raises fresh valuation questions. Burry's warning is aimed at the mega caps that are carrying the broader markets. And the move to borrowing is turning AI from a growth story into a leverage story. That's what makes this moment different. The easier initial gains from the hype and the multiple expansion, that may now be behind us. As investors, they're weighing the cost of keeping the boom alive. Now, this chart, you see, it's Meta versus Alphabet over the last few months, and it really sums up a shift in the AI trade. The market is rewarding players like Google that are selling basic AI services. Meta, on the other hand, where spending is outpacing revenue gains, that's being punished for promises without payoff. Another way of putting it is tools and services versus a vision, and the market right now wants to see results. Scott, debt, meanwhile, that is certainly reshaping what powers the AI trade, and it's adding more risk. The build-out, it's no longer being fueled by venture capital or profits. It's loans, it's bonds, it's private credit, and that gives bears like Michael Burry more ammunition.
D, thank you.
So that debt argument, again, I'm just hearing a lot more of people talking about this. I think Michael Burry, whatever he's going to talk about on November 25th, when he announces his book or whatever else he does on that day, might be about this idea around debt and corporate debt. Now, again, I'm still trying to figure out how much of an issue is that. The reason people are freaking out about it, Oklo right here, down 4%, is because in 2000, in the dot-com bubble, that was one of the core ways that the telecommunication companies financed a lot of their build out of the internet, which was through debt. And obviously that didn't end up working out. A lot of those companies went bankrupt, and that created the idea of a bubble. The reason a lot of people think that AI is going to have a fundamentally different trajectory here is because there is a lot more promising technology in the context of how they generate that ROI. But to get there, you obviously need money. And over the past couple of years, it was free cash flow. Now it ends up being debt, and it's not just Oracle, it's also Google and Meta. The question is just how much debt becomes unsustainable. And I was reading one article today saying it's going to be $1 trillion in the next couple of years. And that to me sounds aggressive. And so I'm trying to validate sources and be like, how serious will the debt become? Right now it's 100 billion. Could I imagine getting it to $1 trillion? Yeah, given how much demand there is. Do I think it's healthy to have $1 trillion of CapEx finance via debt? Probably not. I also wonder if the credit markets would even allow that to happen. I mean, the reason Oracle is able to raise 35 billion is because the credit markets are okay with a 6.5% corporate bond. I mean, if they were asking for like 9 or 10% because of the risk that they are taking on by holding on to Oracle stock, you might not have the same type of ability for Oracle to raise this money. So the only reason it's working is because private credit is okay with some of the rates that they're getting. It's definitely higher than a treasury on the 10-year. But I don't know if that ends up expanding to be as aggressive as some of the fears that the market may be having. By the way, the 10-year right here, 4.122, that one continued to go higher today. Gold also, big winner today, up 0.37%. Silver up almost 2%. So gold and the 10-year continuing to rise higher today. Yes, Oklo missed on earnings, 57% EPS miss, and zero revenue on Oklo as well. Again, the broader concerns around debt, I think, are warranted. I mean, even NBIS is announcing more dilution, and they have this at-the-money offering. IREN has dilution. All these companies have dilution. The question becomes, as an investor, are you okay with the dilution in order to allow them to grow? And when you hear things from a NBIS that says we only were able to get a $3 billion deal with Meta because we literally don't have enough capacity. Otherwise, Meta would have paid us a lot more money. When you hear things from IREN saying we are only licensing 12% of our overall available facilities, and we have so much more room to grow, and the demand is there to be able to get those deals to build out those data centers, it becomes a lot more encouraging that the debt they're taking on is not for a faulty reason. It's for something real. It's just how much is the market going to be able to put up with it is the broader question. Oracle right here, still down on the day. Oklo recovering a little bit, bounced off 99, actually holding 100 pretty well, and now at 102.50. SOFI 31. SOFI had a great day. Again, Noto bringing crypto back to SOFI. You're going to be able to invest right through your bank account in cryptocurrencies. SOFI right there, $31 after hours, as that one continues to go great. So again, on a day like this, I think the summary is S&P ended green. Data center plays got smashed, which I think is actually very healthy since a lot of them were trading just not even at aggressive multiples. You can make that argument, but just like in an aggressive fashion as in terms of how high they've gone up. And so them taking a breather is not crazy. Open Door is up today. I think that's pretty much because the CEO said he was buying stock. So that's why Open Door is up 7%. I can't think of a sort of another fundamental reason. And then you had crypto take a breather. And that was kind of the extent of kind of how this market ended up playing out today. Top 20 stocks traded in the options market, and then we'll look at fear and greed. You had NVIDIA, Tesla, Apple, CRWV, and AMD actually take the top 5. So NVIDIA with 2 million, Tesla with 1 million, Apple with 800,000, CRWV, AMD, Open, Palantir, Rivian, IBIT. Oh, shout out to Rivian. When Jason gets on, we'll talk about that. But massive day for Rivian, up 7%. IBIT, Meta, Pfizer, also big day for Pfizer. It was up 7%. SoundHound, NBIS at 303,000, SMCI, Amazon, Beyond Meat, Oracle, Cipher, SOFI, IREN. So a lot of those data center plays ended up making the top 20 list of options that were traded today. AMD is moving after hours, is it? AMD is up 4%. You are correct. Why is it moving after hours? That is a good question. Are we just getting a delayed reaction after Investor Day? AMD up 3.5. Let's see if there's a headline. I would imagine there was a deal. I doubt there's that much of a delayed reaction after 4 hours. I don't see anything. Maybe they're having more conversations not on tape right now. And Lisa Su said something. It's a pretty big move, dude. 4% on AMD is not small. It's a $400 billion company. Look at that, pushing 5% right here, 247. NVIDIA, is NVIDIA moving? That's a good question. NVIDIA, yeah, NVIDIA's not moving 5%, but it's moving. Nebius is moving as well. IREN is moving as well. All the data center plays are moving. AMD kind of leading it here. Yeah, let me check CNBC. Let's see. Weird. The 35% revenue number they announced like a couple hours ago, so I don't think that's the news. CNBC doesn't have the headline. Yeah, that's a pretty big move on AMD. 5% is no joke. Investor Day, I would imagine, is still going. Yeah. And they might be saying something. Palantir also going green. AMD now 4%. I mean, an after hours move like that, you would imagine there's some headline. Oklo still down 3.4. So that's going up. Margin guidance is higher. Yeah, but didn't they already give that like a couple hours ago? Unless they literally just said it. AMD CFO expects to drive greater than 35% revenue compounded annual growth rate in the next 3 to 5 years. Yeah, this came out 5 hours ago. Not 5 hours ago, 2 hours ago. That's the headline that I'm seeing across Bloomberg and CNBC, but that headline is old. Is the street really reacting to a headline from 2 hours ago now that it's like going viral? Okay, here's another one. I think this might be the headline. This might be the better one. This one, because, no, this one might be it. AMD sees gross margin ranging between 55 to 58%. 55 to 58%. That might not have been disclosed a couple hours ago. I thought it was, but maybe it wasn't. Projected annual revenue growth at 35%. Data center revenue to grow 60% with a $100 billion annual run rate in 5 years. Lisa Su says total data center market will hit $1 trillion by 2030. Demand is insatiable. I think it's the gross margin. A lot of these other headlines are old. All right, AMD up 4%. It's bringing all the data center plays with it after hours. A lot of them moving in tandem. Again, AMD, NVIDIA down on the day. Nebius, CoreWeave, all those guys are going to get hit. Is CoreWeave green after hours? CoreWeave is trying to go green. it's like really trying. That's such a rad day. It's trying to get a little bit of action right here. But AMD up 4%. Okay, not bad. Good stuff for AMD as that one continues to go green. Again, Oklo was the major earnings, and that stock down about 2% after our stock draft. I do own AMD in the stock draft, which has been nice to have. We are up 35%. Matt's up 27. Steve's up 6. Tanner's up 19. Chris is up 5. You got AMD right there. We're up 87% on that after buying it at 126. Algorithm emit. Dude, I hate saying it's algos, but a lot of times it's these freaking algos. Like, we know it is. Like, all the data center plays go down and all of them go up at the same time. Like, that is a lot of those names being put into a bucket. And then the algorithm, dude, I was reading an article. This was about 5 months ago. The algorithms have become so strong. They are using natural language processing. Obviously, in the age of AI, that makes it a lot easier. And essentially every single freaking word of an earnings transcript, of a CEO's statements right after the earnings are released, et cetera, is being put into a digestive system to try to understand and make sense of what is being said. And you might have one word that triggers the NLP to be like, dump it. And, you know, that happens more often than not. And you might have one word that says pump it. So it's not just a beat or miss on revenue and EPS that triggers these algos. There's a lot more sophisticated stuff here. And, you know, that's why a lot of this stuff can take the street higher or lower. AMD right here up almost 5% after hours. Nice to see that going green as well. Jason should be on in about 5 minutes. He's hopping on in a second. and then we will get into Technical Tuesday. Apple is still green after hours. AMD 247. See if we can crack 250. Apple right there. Wow, Apple actually into 270. Apple's up 2% on the day. 275 for Apple. Not bad. That one continuing to move after hours. Oklo, it is down 1.4. Okay, there you go. How did Rocket Lab go red? I don't know, but you had a lot of these growth stocks sell off towards the end of the day, which again, it was one of those days. I mean, even Grab, right? I had no faith that Grab was actually going to hold on to the green. So you had a lot of these names sell off on a day when NVIDIA sells off. Most of these names are going to come down with it. But I think after the day we had yesterday, it's not crazy to see some of that consolidation. NBIS right there up a little bit after hours, and then CoreWeave finally going green. Look at that. AMD actually bringing CoreWeave back to life. Almost nothing gave CoreWeave a green candle today. This AMD move kind of helping it out right there. That's up 3.8%. Okay, before we get into Technical Tuesday, I did want to show everybody some new stuff that came out from a macro perspective. So here's what Fannie Mae is thinking of. They're thinking of dropping their credit requirements on getting a mortgage. Fannie Mae is set to drop its 620 credit score minimum. The mortgage giant will instead use its own analysis of risk factors. Officials say they're easing barriers to borrowing. This is from homes.com. It's just the latest in a series of policy changes aimed at creating home ownership opportunities in the United States. So there's two things that are going on right now that have a lot of people tweeting Michael Burry memes from The Big Short. And you've got people just thinking, goodness, like, is this really happening? Number one is this whole 50-year mortgage. And then number two is the idea of dropping credit requirements in order to qualify for a mortgage, which the last time we did that at a scale where, you know, things got a bit out of hand was in 2008. That didn't work out too well. So I don't know what to make of this yet. I wanted to bring it to people's attention, but obviously this administration is focused on affordability. They're focused on getting the average price of a home down, or at least the average price of a monthly payment on a home down. And reducing credit requirements is a great way to get more people to buy homes. The question is it the best thing for the economy? Here was Trump yesterday speaking about the 50-year mortgage as well.
Housing costs are still out of reach, and another thing that your administration is trying to tackle. Many Americans, the average age of first-time home buyers are now up to age 40, which is sad. The country you and I grew up in.
I inherited that. Look, you have to understand.
Right, but let me get to the question, though, because your housing director has proposed something that has enraged your MAGA friends, which is this 50-year mortgage idea. So a significant MAGA backlash, calling it a giveaway to the banks and simply prolonging the time it would take for Americans to own a home outright. Is that really a good idea?
It's not even a big deal. I mean, you know, you go from 40 to 50 years, and what it means is you pay something less from 30. That some people had a 40, and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor. It might help a little bit. But the problem was that Biden did this. He increased the interest rates, and I have a lousy Fed person who's going to be gone in a few months. So
that was Trump's defense of the 50-year mortgage. Now, UBS did some analysis on it today, and they said on a average $420,000 home, the lower monthly payments on your 50-year mortgage versus 30-year mortgage would be about $119. So you'd save about 23 grand on the monthly payments. But by stretching the loan from 30 to 50 years, it would roughly double the total interest that you pay, and obviously slow down the rate of time for homeowners to build equity. So I think this administration is trying a lot of different ideas. We're going to see how it ends up playing out. I do want to bring it to people's attention, though, because at the end of the day, like, we've got to keep a track on what's going on with the bifurcation of this economy, and we really have to keep a track on what's going on in the credit part of the market. The whole regional bank stuff that we had a couple weeks ago, that was an absolute nothing burger. Reducing credit requirements to buy a house, that could be a something burger, especially if it starts to spiral. And nothing has happened to that extent yet, at least from my knowledge. But it's something you got to have on your radar if you're an investor, because obviously these things will matter long term if they end up playing out. So there you go. That's what we got going on. Thank you, everybody, for being here. We're going to get into Technical Tuesday. For those that are new to the channel, this is when I bring on, in my opinion, the world's best TA expert onto the show. and we do some work on some of these names. I have a hard stop today at 7 p.m. Eastern. So we have, I think, more than enough time, about 2.5 hours. And I'm sure Jason has to get out of here as well around 7 to get through these names. We're going to go through sort of the top 15 to 20 names, the NVIDIAs, Teslas, Palantirs, Robinhood, all those names that matter. And then we will take audience requests. I will put a Google Doc in the chat and pin it so you guys can see exactly which names we've already done. And so we'll take requests in about an hour, and we'll get through some of the main names first, and we'll keep going from there. Having said that, it has been a long 2 weeks without doing this, and I am very, very happy to roll the intro. Dude, I love that intro.
We made it back, baby. We made it back.
Do you know how much people miss you?
It's been a long time, man.
Look at this guy. Stop yapping and bring out the Asian Steve. Like, people just are dying to see you.
Dude, it's been a while. I missed everybody.
It's been a long 2 weeks, but it's good because now we had all the earnings finished, so we can actually.
We've had all the mega cap except for the beloved NVIDIA is still to come. Feel like the market's almost like waiting for that to hit still.
Agreed.
Yeah, that's gonna be the next one. Well, the big one, and then in between now and then we have a lot of small caps. But yeah, so we still got a lot of stuff going on. So hopefully this is it. So it's funny because it was looking really short into was it Friday? And then instantly, like it was looking ugly. like it was looking ugly Friday afternoon. And then all of a sudden, just that's how it goes, right? But how quickly things can turn on, what was it, just the last half of Friday, and then instantly just on the idea that maybe the government would open back up, and then boom, reverse right back to the highs on Friday. And then here we are, just kind of trying to let the dust settle and see how if it can actually sustain. But yeah, I think you'd posted a couple of things. We're like close to, what was it, max fear, extreme fear, what's it called on the fear and greed?
Yep, extreme fear.
Even though it doesn't really feel like it, even near the highs. But the VIX, if you guys look at the VIX, that was, anytime the VIX is like over 25, which we didn't get to, we got to like 22 and a half. That's usually a good indication that, all right, well, it's probably time to start looking at picking some things off. But in the moment, it's always hard. In the moment, it's always hard because things can go sideways, right? And if the sentiment is not fun, things can kind of just blow past what you think is your technical support, which is what today is about, right? So, we'll maybe look at some people's investments and stuff, but my thing right now is just to preface this with hey, look, we were at last week, probably peak bad news. Right. We said tariff stuff coming on. Government's been shut down. No sign of that ending. Now, at least we have a sign of maybe it might reopen. We still have tariff stuff coming in. That's to deal with. And if those primary things come off, then, it could be instantly about facing back to the highs. We'll see. But it wasn't that big of a discount either, which is kind of the disappointing thing, because I wanted a big discount and we didn't really get it.
So let's start off with SPY then. And I'm curious kind of how you're thinking of the broader market, because 683, it's less than 0.5% away from all-time highs, which is really nice to see. But on Friday, we were pushing 659. So definitely curious how you're thinking of the broader market right here as well.
Yeah, I think that's the thing. So also, for the noobs, I'm going to pull up the clock. This should work. I think it's going to work. I think that's going to work.
There you go.
Is it working? It's not working.
Oh, it goes
No.
away. Are you doing it in a new way that you did from last time?
I just forgot. It's been so long, dude, that I forgot how to do it. Wait, maybe I need to do it like that. There you go.
Perfect. Perfect.
There it is. All right. So 5-minute timer so I don't go too far over, at least for the primary ones. So SPY, SPY, this is like the broad index. One thing I will say is that there's SPY, Qs, IWM, which is the redheaded stepchild of the indices, if you will, indexes, and diamonds or DIA. And usually if you're looking for a good trend, then you're looking for all of those to go in the same direction. And we don't have that right now. We have what we call like almost like divergence isn't really the right word, but some are stronger than others. Qs is actually currently like the weaker of the indices. And what that means is that we're seeing a little bit of broadening across the board. The yellow lines, which you may not be super clear on my screen. I think this is okay. Does this look okay on the screen share?
Yeah, no, that's fair. That's good.
So this is last month right here. And I'll just make this, I don't know, bright yellow 4. That's showing up.
Yeah, it's easy to see that. That's not too bad.
So that is September high. So not October. This is September high. We kind of dipped right into that right over here. And the blue line is the 50-day simple moving average. The white line on my screen is the 20-day simple moving average. Those are the squiggly lines. These lines here, this is last week's low, and this is last week's high. So this stuff is important right now because what happened is that we went down, we breached last week's low, we came in, we retested September's monthly high from a monthly candle. Like if I turn this onto a monthly candlestick, basically we just tapped that prior month, September month high, tested it, and reclaimed all the way back. So I'm going to go back to a daily chart here. And then from a weekly perspective, well, now we're back into last week's range, which is fairly constructive, meaning we didn't continue on down the road. In terms of our trend, we are actually we're still very much intact. So the trend is still up. We had a little brief love tap, which, it probably felt rough in the midst of it, but here we are kind of back towards the highs and right back to last week's level. In the absence of non-farm payrolls, I'm using ADP levels, which have actually been holding pretty steady. And right now, this is November's ADP high. So with the absence of official NFP, the market actually has been operating off of ADP, oddly enough. And so for that's 680, and really it's last week's low of 678. So as long as we can actually hold within this kind of range, if we can kind of come in, chop around like that, that's going to be good, at least to 690. That's going to be that's all-time highs, really. But what I'm looking for in order for me to get that kind of what we call confirmation, right now, I don't have that. What confirmation is going to look like, and this is maybe a little bit more advanced, is what we need to see is we need to see multiple days opening and closing above. So tomorrow is going to be an important day. Today, not so important because the bond market is closed and we don't have the full participants in the market today because a lot of people didn't have their cash available because we didn't have the day traders in the market today because their cash was still hung up, hadn't cleared yet.
Do you like that we ended green even though NVIDIA was red? Do you think that was productive for the S&P?
I think that's exactly the broadening that I'm talking about. So the broadening of the market as a whole is important. Is an important note. So even if the mega caps don't come down, I'm running out of time here. Even if the mega caps don't go up, what's happening under the hood to tell you that this is in fact not a bear market is that other components are catching a bid. Other components are being lifted and helping out lift the broader trend, even though the Mag 7 or the main things like even a Palantir or Robinhood might not be participating like they normally would. We have other B team players that are coming up, C team players even, that are coming up and for an assist and actually continuing on the trend. And we in that instance, it's a cool thing to see. It's a healthy thing. What's unhealthy and the piece that would have been the canary in the coal mine, and since I'm done with SPY, the trend is intact. That's what's important for SPY. I'll move on to the dollar index. And I posted this on my timeline. This was kind of like that canary in the coal mine, if you will. And I know you didn't ask for this chart, but I think this is one of the most important charts in the market right now. This is the dollar weighted index. Dixie is not the dollar itself, but it's the dollar weighted against a basket of other currencies. Sorry, I say Dixie. Traders call this the Dixie. DXY is the term, or is the ticker. It's actually not a dollar amount, so it's just 99 right now. But it had bottomed out around 96. If I pull this back and we look at this, this is this is pretty much the center line of this chart right now. And for the more recent length of time, it's actually been slowly grinding lower, and this more recent press to the upside in equities has been kind of, and gold has been coincided with a big press to the downside recently in the dollar, and even in near term, and we think about this very myopically, very short term view, is that if everything that we're trading is denominated in dollars, well, if the value of dollars themselves are going up, this is almost like inflation-ish. If the value of the dollars themselves are going up, well, then the things that we're trading are going to cost less dollars to buy in their value, and therefore they might come down a little bit from that perspective. Longer term, it's a totally different view. This is, like I said, very, very myopic, very short-term view. But how the market knee-jerk reacts when we have this kind of press to the upside, it's a stutter step sideways. And maybe in these very short bursts of movement here, this is that little pullback that we'll see in the broader market. And the fact that this ran right up into that 100 resistance and met the 200-day simple moving average and stopped on a dime. When I say resistance, we can look back, resistance, and I can pull this chart back and look at this. We already did. This is a massive pivot and currently not breaking through, actually kind of constructive. I'd like to see a weak dollar in general to be uber bullish on assets, but 2 week is not good enough. There's a whole nother discussion there. But as long as the dollar doesn't explode in our faces to the upside, this is generally constructive. Also, why we'd see a little bit of a pop in gold, things like that. This little rejection.
And Trump likes a low dollar as well.
Yeah. So I think this is important to see. Now, right now where we are, we're kind of, at a bit of a support level. So it also means that, hey, look, we could go sideways. And as long as this starts to, as long as it doesn't go too far, too fast, it can go up and that's fine. But if it explodes in one direction or the other, that's when the market's going to be like, all right, well, maybe I need to readjust here for a little bit. And we might see some knee-jerky reactions in the market itself. But this is constructive, and more sideways action for the dollar is going to be generally constructive for the equity markets as a whole also.
Okay, that's a fair point. I think
probably not a chart that everybody's watching, but important.
No, definitely very important. And obviously, one of the reasons why the markets have likely been strong this year is because the dollar has been weaker. Let's do Palantir. I mean, we had a pretty awesome earnings. Then you had the Burry short, fell all the way to 169. What are you thinking of Palantir in the 185s, 190?
So Palantir, I mean, congrats, by the way. Congrats. Not quite to 220. I think after hours, like if I turn my after hours, there it is. So the measured move was to 220. And, unfortunately, sometimes it works out this way where you get to your upside target, and it's all in the aftermarket and it doesn't, present itself or hold necessarily in the open market. And that's kind of what happens here on Palantir. this was the move, target acquired. That's how it goes sometimes. But to be constructive here, what happened is that this came back down and retest the same area it just broke out of, right? So this area here was what was acting as support, where buyers were showing up right here in that 170 area. So if I zoom out and I just drag that straight across, like you can see it show up. So we have multiple tests here. 1, 2, what is that? I mean, 1, 2, 3, 4, 5, 6 tests. 6 is a lot. I didn't realize it was 6 times, dude. That's a lot.
It was very choppy that week.
Yeah, so 6 times it's gotten to that 170. I would not like to see that get tested a whole lot more.
I agree.
Yeah, just so here's the deal. Why I say that, and if you're not familiar with support and resistance, they're like, you know, if price is like a battering ram coming up against a door, right? If it's a floor and a ceiling, you can only take that hit so many times and every time you take that hit, the door gets weaker and weaker and weaker until it finally blasts through. And 6 is a lot, but the bulls are holding. And that's also true. What I'd like to see is this hold higher up here. So this area that was prior resistance, what we're going to be looking for is called an SR flip, or where resistance becomes support. And that's more towards this 180 kind of 3 level. So down here, right here, it's about 180, where that actually turned in support for just a little bit. I'm looking at this level, these guys, where this ended up being resistance, all of this. This is multiple tests as well. I want to see the people that sold here, anybody that was getting short in this area, bury, cough, whatever, whoever it is, I don't know, right? Anybody that was selling here, what we want to see the story of price action start to tell us is that we want to see them turn into buyers and cover their shorts, which kind of is what we saw a little bit today. And so exactly at this level, and I'm going to call it a zone because price action, because support and resistance is, you know, it's not exactly a hard line in the sand. That's important to understand also. Is that we see one test here, 185, and we see some buying action come in literally today. And if this area holds, I can see price chopping like this, but I want to see that kind of price action where buyers step in right around this 185 type level. It can come into 180, but I still want to see buyers step in down here as well. And I want to see those shorts really cover. I'm going to call out 178.80 specifically as the 50-day simple moving average as really like a higher value target, not necessarily a buy spot, but a spot where Palantir can come down to, and then I would like to see it bounce. The issue with this right now, and this is a big issue, is that this spot here is a lower high. This is definitively a higher high, so HH for higher high, but this is a lower high. Sorry, not very good here. And this is an equal low. So best case scenario, what this chart is telling me is it's actually telling me chop. So I would like to see this turn into consolidation, something like this. And I would like to see Palantir actually consolidate sideways for a bit, and then we can see a better press one way or the other. It's the charts actually says to wait right now until I have a clearer sign. But those are the things that you're looking for is for that prior resistance to turn into support moving forward. If not, that's not exactly the best place. It's not like a buy zone. Your trade location is better towards that 178, and where I would really hope to see buyers step in or shorts cover, not necessarily buyers step in, but shorts cover. And I would be really cautious of this type of move. And if this does happen, our prior support is in this 160 from this area still. And I would definitely think that they would step in at that level.
Okay. This is not a core one, but definitely one that I think a lot of people care about on a day like this. CoreWeave.
I got a lot of questions about CoreWeave too. So personally, I do invoke the 3-day rule post earnings. But what we can see today is that, all right, so we're coming in and we're testing the more recent double bottom. And, one thing I'll say is that I just talked about a possible lower high on Palantir. And that's important to note, right? This is technically a double bottom. So, which is Amit's favorite technical spot, if you didn't know. And it's really this. How come that didn't come in? It's really about this. So this is like equal lows. I think we get to test this double bottom, which it looks like we're coming into right now. This may be close enough for government work. I hate the term, but it is what it is.
What do you mean with government work?
It's just a saying. My dad was the director of IT for the FAA. It's just what I say. It's just a saying. We just say it.
I thought because there was
actually irrelevant. I'm sorry, erase that.
No, because the CoreWeave CEO said that the government should help out with the data center shit. So I was like, oh, are you saying?
Totally irrelevant comment. Yeah, it's just a saying. People say it. But so I think you get close to this. This probably creates some kind of level, but I think it could breach this. And here is what I'm going to call like a price of interest. And that's at basically the psychological level of $100. So remember, stocks over 85 get to 125. Stocks that lose 125, 120 usually come back to 85, possibly 75. And that's kind of like the trajectory that we're seeing. What has to happen for CoreWeave right now is, let me just make sure this is right. Yeah, so we had lost the 108 that had to hold. We lost the $100 level that kind of had to hold. This is earnings. It's like a knee-jerk reaction, and we're going to test this double bottom. I don't think that you have to buy exactly on this, but if this is 1, 2, 3 retests are fine. I think on the third one, it probably breaches just slightly. And the number is, what is the number here? Let's get it. $85.26. So I think it actually comes down and it might breach that. What you're going to be looking for when it comes to defining support and resistance. And if I zoom in right over here, when I say breach that, so you don't want to put like a hard stop. You don't want to have a resting order here, because this is exactly what I'm talking about. There's a little tiny, we call it this a wick. If you put a stop loss on at 85, you would have gotten wicked out and you would have sold the low at $84.44. Like, you don't want to do that. That would suck really bad. I think something like that could happen. But what you're looking for is buyers to step up again over 85. So it can get choppy in here. But when you see this kind of price action like that, if that happens, that's going to be a telltale sign. Otherwise, we're sitting at 88s. It's okay. I'm being very precise, so I guess it doesn't matter. Around here is fine, as close to 85 as you can for a shot. It's possible that it breaks down below 75, and then you might just sit there and wait. But I would really wait for buyers to show up before stepping into this one, because the momentum here is from that 135 breakdown. The momentum has been building to the downside, and you want to see some kind of sideways action, which would mean that the shorts are covering, and we're not seeing that first. So that's what I'd like to see first, is some kind of sideways action. And then once I see some signs of life, then it'll give me a better cue. Otherwise, I could just be stepping in front of a falling knife on this one.
Yeah, the data center plays got hit today, but CoreWeave got hit almost double than the average data center stock. So I think there's something a little bit more street specific there that you're right about.
Yeah. So net 85 is interesting, but you need to see buyers step in.
Meta.
You know, the last time I was here was a long time. It was 2 weeks ago, 3 weeks ago.
You were at 750.
3 weeks ago, and you asked me what price I would buy Meta at.
I think you said below six. Hold on. Okay, so you know for sure. I think you said 630 or below.
Yeah.
Am I right? I think you said.
Yeah, we're like right there. I didn't think it would actually happen, right? But
me either.
But I'll tell you how we got there. So 633 was what I just did. Is that wild? I mean, wild. 633 is measuring what we call from a trading perspective, we call this swing high to swing low, meaning that you look at a chart from a very broad, you zoom out, right? And I look at, this is from a daily perspective, I'm looking at a lot of time. Swing high, swing low means the most recent large low, which is 479. The most recent large high is 796. So this is swing low to swing high. It's just left to right is what it is. And that's not high to low. It's just what it is. It's left to right. So swing low to swing high. In this case, a 50% pullback from here to here happens to be 633.90. Again, in support and resistance, what I need to see is something very similar to this. So I could take these lines off. And this is a good example, this area right here of what it looks like for something to go sideways, create a little bit of a bottom, and then for buyers to step in. And this time frame is about 20 days, give or take. So it's not something that has to happen right away. This is not a V recovery. This is a sideways consolidation, and it gives buyers a chance to actually buy here. I would like to see this from Meta. That's at 633.90. That happened exactly there in the past. But what I don't have is a structural break. Since the downfall, since the commentary, I have nothing but lower highs and lower lows. I need to be crystal clear about that. There's nothing in this chart right now that shows me I should jump in, other than maybe a higher low, but I don't have what I need to see is which would be a higher high. And that higher high has to show up over 634. The low was 585, and that's where I was going to get really interesting. So below 600, and this is how that works. And so I would still be very interested in buying more. Buying Meta just below 600, and I think that that's still possible. I don't know what it is about round numbers. You know, it hit exactly 600. Everybody stepped in like instantly, and they're still stepping in. So we might not get below 600. I'll just leave it at that.
Have you nibbled at 630 at all or no?
Oh, I nibbled at 603, 605.
Oh, you nibbled on Friday.
I've been nibbling. Because it's one of those stocks where I don't want to be overly precise.
Yeah.
I don't, right?
Great.
I'm going to tell you guys right now that this 590 level is really like that's really that's my spot, right? 590. But do I get there? 592.33. There it is. Right. I have an imbalance in the market, and that I have a lot of confidence from a price action perspective, because this 633.90, that is 50% drawdown from that swing low to swing high. But when we lose that 50% level, which by the way, we have in technical terms, technical analysis is about statistics and probabilities. We have like a 65% probability of actually seeing 585 if we cannot get back above 634. If we cannot get back above 634, we have a 65% probability of actually getting here. So those are the statistics. That's the math right now. If we can get back above, it's a near zero probability that this is happening. So we're trying to get back above, but we're not back above. And this chart is currently in flux. Do the buyers like just start piling over themselves? I don't know. We're going to need to see sentiment change, but here and now, this is a nibble spot for sure for me. And I think if you're frustrated about it not V recovering, this is going to come down to your personal time frame of how long you anticipate holding this. But I think sideways price action for a month even is actually going to be pretty healthy to let some people create a new investor base on Meta, and with that 585-ish level being a good solid low. And I take that back all the way to that. This, by the way, is that broadening formation from our sessions of way back when. 585 is the center line of that initial breakout all the way back here.
I agree. One of the reasons I just started buying at 630 was because like I feel like I'm being way too greedy asking for 580. If it gets there, it's like, okay, that's fine. And there are concerns about Zucks and capping. All that stuff is legitimate.
For sure.
Is it enough to take it down almost 30% from the highs? I don't know.
Yeah. So as an aside, this is a technical spot that should act as some kind of general support. It's like Boeing right here in the middle. We have a broadening formation. If this fails, look, this is all still possible. If the market decides that they hate Zuck, they hate Meta, it's never happening. I need to see buyers step in, right? We need to see this happen, right? We need to see people step in. And I'm seeing a little bit of it, but not enough to push the price higher. All right, moving on.
Hoodie.
I haven't looked at it. I think same thing.
What do you mean you haven't looked at it? You're cheating on Hood? Like, what do you mean you haven't?
No, I'm not cheating on Hood.
You've gone multiple weeks without looking at Hoodie?
Yeah, I'm just so not worried about it, dude.
Dude, no, that's not how it works, bro.
I'm so like at peace with my Hoodie position. Like,
no, Vlad doesn't take days off, so we can't take days off.
No, I mean, there are a lot of things. Like I said, I think the market is in, it's broadening, right? And there are going to be times where, and I'm not saying this is going to happen, but I've said this before, there might be times in the market where, things go sideways or your stocks might not go like crazy parabolic. And maybe, just maybe there's a moment where people end up using my Hoodie like their personal ATMs. I think this is like one of the best stocks in the market. Did you see their quarter, by the way? Like, bro, like that's how not worried I am about this. And so if I get something dumb, like 117, yeah.
Did you think 125 was dumb, or did you think that was just par for the core?
I'll be honest with you, dude. I pulled an emit because I was already buying there, and I got greedy, and I missed the dip. And I saw it happening, and I was like, ah.
Yeah, but you're also super overweight Hood, so it's.
Oh, I'm super overweight Hood. It's by far my largest position to this day. I'm just done selling it. It's going to be my largest position for a long time. I'm super happy with this. I'm super happy with management, what they're doing, the execution, and like what they're producing. Like, I'm happy. But that said, what's also true is that this is going into consolidation. If you didn't know, it is going into consolidation. And so I think it needs some time for people to kind of understand that. And some blips along the road are fine. I think that I think it's possible to see like that 120 wick, but yeah, that 120 was good. And I think that every major dip on this gets bought, dude. Like that's my opinion. I have lots of opinions on a lot of different things, and I'm wrong a lot of the time, by the way. So take it with a grain of salt. This is not a thing.
I also think it's healthy, dude. If it can consolidate from 120 to 150, even over the next 6 to 12 months, like I know that sucks because it's not going to, but like that's okay. It's going to grow into its multiple, and it's going to be very healthy for it.
Yeah. So I'll just kind of go with this and just let you know where I'm at. So right now, If this is over 143, then we're going higher right now. But I think this is the consolidation that we're going to be kind of traversing for a while, like this. And eventually we're going to get up and out. This is 143 right in here. And when that finally happens, and so now you'll see what I'm thinking. This picture that I just drew is basically what I'm thinking, which is sideways, and maybe people want it to do that. To me, this is perfectly fine, perfectly normal. 175s, baby. 175s is where I'm going. And then I think we do this again.
It'd be fun if we have a Super Bowl run end of year as well.
Yeah, so timeline on this is more like late Q2, maybe next year, Q1,
No.
late Q1, maybe into Q2. Because crypto is shaky. Crypto is on very shaky ground right now. I'm not gonna mince that one. It is very shaky. I've not been super bullish on crypto. Here, I think that there's still possible liquidity grabs that could happen. BMNR broke down. I think it's still testing levels of support. I'm not selling it. I'm still like DCAing it, but I think it could still chop around. And this, in the near term, is still the market still kind of associates this a lot with crypto. And the more that Vladdy associates Hood with, layer 2 blockchain stuff, the more associated it gets with that. And we'll see where it goes. But net, yeah, no, I'm not worried about this. And if I get big discounts, this is number 1 on my shopping list.
Agreed. AMD.
He agreed, you guys. Number 1.
I agree with everything you say, bro. And if I don't,
it really doesn't mean anything. Oh God. AMD was very shaky ground intraday. This looked like it was going to be a sell the news event, losing the 50-day simple moving average. 20-day simple moving average. That's the white like line right here. As an aside, so I have these funny phrases, so don't make too much fun of me. As an aside, what's true, blah blah blah. We'd hit our upside target, coming down, retesting this 227 is a prior all-time high from when? I have that on my chart from 2024. I didn't notice that.
Well, yeah, it hit that in March of 2024. That was the top.
Yeah. So that's constructive. Wow.
Dude, that
Okay.
AMD deal re-rated the entire company and actually got price discovery.
Yeah. Then it insta-gapped up.
Dude, let's just be honest. That OpenAI deal made millionaires in this stock. People were already doing well. That deal took.
What do you mean?
Like, because it was stuck at 150 for basically 5 months, and the deal
That made million. I thought our technical Tuesday buy sub whatever it was in the 90s made millionaires. Okay. Wasn't our technical Tuesday buy at 92?
Yes, but that was also when AMD was 90. You could buy anything.
No, our technical Tuesday buy was that AMD is no longer going to be the advanced money destroyer, and we set it buy at 92. You don't remember this?
No, I think some people picked up on that. I definitely didn't, but that OpenAI deal really so.
Listen, Linda, we did that.
Okay, yes, you called the bottom. Is that what yes, you got it.
That wasn't the bottom. It wasn't the bottom.
Close.
It's not my job is to call the bottom. Bottom's 76. I didn't catch that. But my job is to know when the trend is going to turn. And that's a trader, right? That's the difference between a trader and I'm not a bot. That's not my job. But the trend is actually still intact. It is slowing though. It's waning. It's heavy. The trend is heavy. It's gonna be heavy. But that 227.30 is actually it's a big deal, and I need to you know what I need to do is I need to set an alert here for every time that actually crosses. Thank you. And I think that's going to turn into support. Or it's going to turn into a flippening, if you will, of sorts. If this can hold 225 support, if you will, for the foreseeable future, okay, 225 support for the foreseeable future on on AMD, that's what it is. It's as long as it can hold sustainably over that, that's going to be your support line. If it's below it, 225 is going to be a resistance, and you don't want to see that. Because that is going to be a hard one to stay over. You know, this looks good. Valuation aside, AMD actually has never really traded on valuations. Also true. But this looks constructive. What you're going to need to see now is you're going to need to see this turn into an explosive move. You have a bit of what we call like a fair value gap, this empty space in the chart that is up to 255. So I'm also going to need to see the chart actually play out and see this make a new high. So in order for the chart to sustain, you're going to want to see this create a bit of a new cup and handle. Since you guys are pattern traders and Amit's a pattern trader, you're going to want to see this create a new cup and handle, a new one. This is way before anybody else even knows that this is a thing. This is what it's going to look like. But you're going to need this to breach that 267. Then you're going to expect a pullback. You're going to expect a very disappointing pullback from 260, near 270, all the way down to 255. Your hearts are going to be broken, but you're going to need to buy that dip if that happens. And that dip is going to be around 255. And that's going to take you to the goddamn promised land of 300. What? Really? Okay. If that happens. But that's what that pathing is going to look like. I can't believe I said that. I'm literally just reading the chart.
Okay. I think it's cool that it's normalizing 230, 240. I think that in itself is exciting for a lot of AMD investors. That's fair. Let's do NBIS. New position for me today. Stock's down about 7%.
I thought, dude, you guys, just so I text this guy when to buy things. And apparently he doesn't because he does it later.
Did you tell me when to buy NBIS? I don't even remember.
This day, I texted you 94.
Wow, at the bottom you texted me to
text you. Show them.
No, you're probably right. You're probably right.
And I said, dude, you need to just buy the stock, because I knew that he was selling those puts. And I was like, you need to buy the stock.
Yeah, I remember that. Yeah, you're right.
Because I don't think you're going to get assigned.
Well, I'm in
and
now.
then so here's the deal. So we get here. Okay, so he likes the stock. You do want this to act as a higher low. You're actually in trouble here, my friend. Don't hate me.
I wouldn't mind if we go back to 94.
No,
some more pain.
You're gonna need deeper. So the trouble is that this is a lower high. So this has to hold. It's not that we're going back to 94. So you would be breaching 94. So you don't want to buy at 94. I'll just save you that hassle. This has to be the low, and then this has to be the low right now. So this is fine right now. You don't want to buy at 94. If you see 94, just stay put. It's not a good place to sell either. Yeah. There is an 86 that's interesting, but also not enticing. The thing about 94 is if you lose this, then you're probably going into the 70s, 5s, which is going to be your discount.
But why it's all technical? Because
you're just testing this 75. Because if you lose this right now, so this has to go into consolidation right now. And what that means is that this, so I just connecting here, and here. That's what I'm connecting. This has to go into consolidation right now, which means that this was a good dip buy today. But because this was a lower high, this chart is going into consolidation, a big consolidation. You're going to get to 130. Don't think it's breaking out because it's probably not without a headline, right? It's probably coming back in to the hundreds. And then it's probably doing this until we get a headline, which will change the story. And the chart will tell you right when that happens. So time horizon matters. But the reason I'm saying don't buy lower than this is because if this was lower, what is this? This is a break of that consolidation. Yeah. You might pop up higher, but that can be a short. Yeah.
Hey, dude, if they really give 75 after this earnings, I mean,
I don't think
I would be excited. I don't know if they actually do.
So 75 is not in play unless this happens. So if this breaches, that would like something like this. 75 becomes in play if and only. So because TA is reactionary when I say things like this, it is very much if this, then that. If 95 breaches again, it will then expect a bit of a bounce, then expect the prior people that bought over here to act as resistance and sell into the next bounce and it to come lower so that it can collect more buyers.
I also think fundamentally that would be erasing pretty much everything after the Microsoft deal. So
it actually would. Yep.
Yeah. So, I mean,
and that becomes a buy.
At that point, you're taking me back to, it becomes about, you're taking me back to September before the deal. I mean,
yep. That would be a screaming buy, but technicals don't really, technicals tell you just like when things might happen. Fundamentals could tell you this is a buy right here, right now.
Right. That's fair. Okay, cool. NVIDIA. I mean, we haven't talked.
Wrap this off on NBIS. This is consolidation. It's a good spot. It would have been better if you had, done it when I texted you. But anyways.
That's true. No, I deserve the shit for that. We haven't talked in 2 weeks, and NVIDIA hit 5 trillion in that time. Have you been surprised of the breakout to 210, or how are you thinking of it here?
No. And the last time that we talked 3 weeks ago, I actually said this, right? And so I'm not trying to be braggadocious at all. This is just, I hope I'm not coming off this way. I'm more in the educational space, right? So like, this is about understanding the market cycles and sentiment. And this was all about, this move was all about what the Mag 7 might say during the earnings report. This whole thing, and what we said 3 weeks ago was that you want to be long NVIDIA before the Mag 7 reports. That's the deal. And this right here is what happened. This was all during that whole thing. And then they've reported, okay, cool. The market's always forward looking. And now it's like, well, what do you have for me next? Right. And so that's over. What's the next news? Well, it's not anything yet, but now, and today, by the way, SoftBank decides to, disclose that they've sold all their NVIDIA. By the way, SoftBank sold the majority of their NVIDIA at what price? I think it was like 45 or something.
Well,
yeah, I don't know.
So split adjusted, it's well below today's current price.
Yeah. So, Moss is probably just tired of looking at it. I don't know, because it reminds them of all the pain. But no,
I would be too, dude. That was a $200 billion stake if he had held on. That's now worth $5 billion.
Yeah, maybe.
But also, I think he thinks there's a better deal in OpenAI.
Yeah.
Right. And so
maybe, and he's probably gearing up for that, actually. So, I think that's to be expected. So we got again another disappointing dip all the way back into 178, which, by the way, we also called this. So it pays. It literally pays to watch Technical Tuesday. Is that crazy?
That's true. That is true.
We should do this should be on the Amit hot tub stream also. We should just do charts and.
You know,
Are you
there is
grinding?
there is a hot tub in this apartment. So,
Dude,
I mean, if you ever come through, I mean, 2 guys in a hot tub doing TA. I mean,
you guys in a hot tub. You're gonna have to come up with a name for this one. Oh god.
Okay, so would you buy here at around 195 or no?
So
Cautious?
November 19th is what's gonna happen. And I think we go sideways. If you didn't buy at that 177, I mean, you got a second chance here at 178. And that was wild. I actually didn't buy this. I did buy this. This was real fast. The thing here is like,
I by the way, I'm the same. I bought 177 3 weeks ago. I didn't buy 178 on Friday. So I'm the same as you.
Yeah. I mean, I think, you know, and I saw it at 190. So what I'm looking at is this area right here. It's 180s. So if I see that 50-day again, and I see this this orange line and possibly up as high as 185, I think this general box here start to act as resistance. Usually, and I'll speed up here. The trick is if this is the low, I want to look for where the last low was, and that's right here. And so the last low, near-term low, before the actual low, that is 186. So in this general box, I would expect to see some kind of consolidation. We can see that similar kind of price action happen here. So I would say down to 185, around 186, around 185 roughly. And so I would expect to see some kind of consolidation. Sideways, this is going to be sideways movement. And then eventually, a couple days before earnings, this start to get its butt in gear one more time over the 20-day simple and head right back into that 200 something, which is going to turn this whole thing into a new consolidation. I do this twice because I need to show you one thing. So, which means that 195 is going to be your clear breakout zone. And 195 will definitively bring you every time to 200. And so, and both ways, that's going to go both ways, right? Very quickly. And then if you get up and through 200, that's quickly going to take you to 210. And then your breach, and I'm just out of time, your breakout is going to look like something like this. This is going to take you into 225s, maybe 230. That's what this trajectory is actually going to look like.
You think that could happen end of year or no?
Yeah. It's going to be, I mean, that actually could, well, what's that? So this is 5 trillion.
230 is like 5.4, I think, trillion.
Yeah. I mean, so this is going to be your Santa Claus rally. This is going to be your actual, if it does, your Santa Claus rally. And then this is going to be your November, December push.
Okay.
And this right here may end up being your actual earnings, unless this ends up being your earnings. I would guess this is broken up into a couple different pieces. So like this might be your actual earnings move here, then some sideways consolidation, and then your November to December press here, and then your actual Santa Claus rally here.
Okay. SOFI, what do you think about this one?
Hey, so SOFI, so talk to me about the new, I think there's a fundamental, did they release the new targets for the pay package, the incentives or something?
Well, that's been set in stone already. He's got to get it to 25, 35, and 45. It's got to be 45 for, I believe it's 90 days on a weighted moving average. So it's got to get there by around March. But crypto, they announced, is coming back today. And that's why I think the stock got pop over the past couple of days.
I mean, if I
feel like you're about to be bearish. Don't be bearish.
I'm not going to be bearish. I'm just going to challenge the crypto logic. I mean,
look, that's not their core business, but I don't
Yeah.
think there's nothing bad about bringing crypto back.
there's nothing bad about bringing crypto back, but I don't know that it would move the needle for SoFi. I do, on the other hand, think that those the targets 35, 45 will move the needle. Not unlike Tesla's pay package type thing, right?
Yeah.
And that's incentivizing, although he's had these things like that in the past. What's true right now is that we knew 2870 was that center line here. This has been a choppy ride. Breached the downtrend at 26s, and that 25 area here has been holding still as that support. And just from a horizontal level area, that's been your support. I don't really want to see this tested a whole lot from here. And then now this is starting to, test the upside of this, right? So 1, this is 2, we got 1 breach, 3, 1, 2, 3. This is, I think, technically your 4th attempt or nearly. And you're reclaiming the center line of this channel. So the targets have always been and remain 35 up in this area right here, 34, just underneath 35. And that has not changed actually on this chart at all. So a lengthy way to say is no change on SoFi. And this is still intact, fully intact, after a bit of a scare below the channel, quickly reclaimed within 2 days, pulling back, holding the upper end of this and acting as now support right over 30, which we know is a key pivot. So as long as 30, just under 30, 29.50 ends up acting as support where it was resistance in the past, that's really what you're going to want to see from a characteristic change in this, where that resistance, prior resistance, starts to act as future support.
Do you think a breakout to 35 by end of year is possible, or you think there's too much back and forth from 25?
No, that's definitely possible. It's the question. The question is whether or not it holds. Because you still have some sellers that are showing up around this center line here, but they're going to give up. I'll tell you right now. I think they're already at the give up spot. Yeah, they're already giving up. So, if this gets over 31, they should give up, and then you should get a bit of a squeeze, if you will, into 32.5 and ultimately 33.85. And you might chop a little bit. SoFi's like, it might even look like this, right? And then, that's what I'm saying is, does it really hold? But that's kind of like what it's been looking like.
The thing is, for Noto to get paid, it's got to get to 45 pretty soon. Like, it has 3 months.
How soon?
Well,
3 months.
On it has to be, guys, correct me if I'm wrong, but I think it's 60 days it has to stay at 45. So it could be below 45 for 60 days, but then it has to be like 55. So it averages out. So by March, for him to get paid by June, it has to be 45, but it has to stay there for 60 days. So a couple months before June, it technically has to get up there.
So 36 is the upper bound of this channel, 36.70. And if that happens, I still think that this can come down and retest that 30, which will be a screaming buy. And then you could get to 40. And then you'd want to see this. It'll probably go sideways. March, I don't know that timeline is intact here.
90 days. 35 is one category, but the big money is 45 from my understanding. And that's a big freaking move. But, that would
I have as high as 50, but not in March. March I have as high as 43.
Yeah, people say it's got to be about the end of March. Yeah. Yeah, I think for SoFi, they need a macro.
I can see that.
I think the rate cut is the catalyst. I don't know if the rate cuts are enough, but I think that could be it.
Yeah, when you zoom out and you look at this on like a weekly, it's cleaner.
Yeah.
Like that's pretty clean when you zoom out and you're not in the weeds. But yeah, and that 28 is important.
BMNR, are you getting bearish? Are you giving up on it? What are you thinking about this one?
No. Can I do Ethereum first?
Yeah, let's do Ethereum first. That makes more sense.
So, since I haven't really looked at it. So Ethereum, ew. So this is where we are. So this is prior highs, broken downtrend, but breached and actually coming back into the broken downtrend. This 35-ish level is important. That was right here, that 35 wick. And then I don't remember where we had it. Somewhere around here, 33.50, which came from this general area. I can pull that all the way across, 33.50. Was it 34s? Something like that, around 34s. Which now, if you bought that, is actually starting to act as resistance, and I don't really want to see that. So that's important to note right now, is that this group of buyers, I think, are kind of getting weak-handed. They clearly sold up here. And when I talked about lower highs and not making higher highs, this stuff is important, right? And I don't remember when it was. It was clearly a few months ago, but like this was a good spot. And then you asked me if I would buy it here now. And I'm like, because this and subsequently this didn't make new highs on Ethereum. And this is the result of what happens when you have that, is that you don't have the strength. So when we don't have the strength, we still have to go lower to get new buyers. And right now we're going to play with that last primary, like wick right here, that 34, 37. I don't think it's a sell, just to start with that, right? I don't think it's a sell. But it's possible that we get another dip. And that dip is likely going to come in the flavor of a flash crash, because that's how crypto works. I'm going to do the same exercise that I did on Meta, and that's left to right, the extreme lows to extreme highs. I'm using a 4-hour chart. It doesn't matter what time frame chart you're looking at. And 50% of this extreme low to extreme high is 3182. And now crypto is very, very technical. They absolutely use fibs, and it absolutely does show up quite a bit. One other thing of confluence here is that this is the prior breakout right here off of 2770. That area ends up being like really, really important. For now, as long as 3182 holds, that is a 50% pullback. That's constructive. But we know that this is my I caramba, right? I also know that my I caramba has more or less played out from here to here, downside. So that's that inverted head and shoulders, whatever. That extension actually takes me to 3150. And so I have confluence right here, meaning that failure to break down here takes me exactly target acquired to 3150. There's another extension. If this cannot get over 3607, like this is going to have a really hard time getting in the clear, and we're still going to have selling pressure come in. There's one more extension that's like 2750s. And I have Confluence at that level as a bigger dip buy. So this is from a real crypto guy that's been around for a while. Like, this is actually a discount. If you did see a liquidity event into the 2800s, I have a little sliver right here, just around 2800 as actually a really good spot to actually get long. It's like 2760, just around 28. Where if you missed it, that actually looks like a very, very good spot to get long crypto right here. And I have a lot of confluence if that does happen, but that would have to look like a fail right now, which is kind of happening as we speak. And then a breach. I could still have this. It would be like a liquidity event that happens very quickly. And then I think more sideways action, which consolidates pretty much exactly where we are. And then eventually goes up and out. So is it a sell right now? No, because I highly doubt that anybody's going to be able to get this with a market order, because it's going to be this kind of fast, very fast. It's going to be this kind of fast. Like, it'll be there for a few minutes, if that. So you'd have to have resting orders sitting at like 28 to probably catch that, which I think is a good idea. And that would be some kind of liquidity event in that instance, which would probably end up being the lows and then set you up for that Q4 run into your silent clause rally, which is very typical for crypto. So that's and even in that case, the Ethereum chart is still intact. So that's what I'd say. When you look at this, it's really just a big sideways box. That's going to sit you literally right here around that 28.
You think BMNR is acting the same, basically?
It is acting the same. One thing right before I go to BMNR, and I'll just do this 2 seconds. Bitcoin is probably going to lead this charge because it's usually the safer route. And again, we're still looking for that inverse I caramba with a little bit of a liquidity grab in at the bottom, which takes a little bit to play out. But BMNR, that puts me not in a sell right now. The breakdown has happened post here 50. So earlier, this can kind of go away. Looking for that this trend line to hold, this consolidation. This is what happens if consolidation breaks. It breaks here. You get spot up pretty quickly around 47, which was like, that's the spot that I wanted to see it hold. It comes back up, and this is what we call that lifeline, where it comes back up, it rejects, retests again. You lock in another lower high, which is why lower highs are important. And you come back in. You don't test this, but you test the lower end of support, which is going to be way down here around the 37s. And right now, you're still technically locking in higher lows. And I think this can consolidate right now. So I don't think this is a sell. I don't think this is a sell. What I think is going to happen, and what makes the most sense, is you have to realize that there are a lot of people that bought in this 47, myself included. And price currently looks like more accumulation down here towards the 37. And it looks actually pretty constructive right now on BMNR. I need Ethereum to cooperate. And Ethereum can cooperate only if it gets back up over that 3600, 3607. So if Ethereum can do this, then I'm looking at another press up to this 3900, where I expect that to act as resistance on Ethereum. And the equivalent is going to be that 47 on, or whatever it was, on BMNR, where people just bought. And that is going to look like that, where I expect that to act as resistance, honestly. And maybe people get excited, maybe they don't. But at that point, that would be sell calls to me. And I expect this to kind of come back in and play a little resistance.
Do you think ETH can get to 9 by the end of the year? Because that's what Tom Lee said yesterday.
9 what? 1,000?
Yeah.
Yeah, I mean, crypto is the rawest form of supply and demand. Let me finish this really quick. 33, as close to 33 as you can, is going to be the equivalent of that 2,800 dip on BMNR. So the equivalent of a $2,800 dip on ETH is about 33 on BMNR. Just so that's what that is. Can it happen? Yes. Does it happen? It's TBD. Is it in the cards right now? Yes, but first we're probably going to get a bounce. So right now it looks like we're going to get a bounce into resistance, which is where you want to be cautious, and then expect some kind of a potential pullback because we have people that were trapped up here. What happens when we get here? Some kind of pullback doesn't really mean that that's going to happen. If we get a pullback and we lock in a higher low at 42, just so you know, that can be really constructive also, and still continue to retest this multiple times, right? So I'm not selling BMNR, but I am prepared to buy it lower. And that's my story with this one. I bought here, and I'm prepared to buy here.
Right.
Done and done. And I've never been on this ride for 9,000. No. So you guys, from a cryptoverse perspective, look, I love you all to death, and I really love seeing everybody get super bulled up on Ethereum. But I very much have I don't believe in the layer 2 things really boosting the value of Ethereum itself as much as you guys do. I think it's very fractional, but it's possible. I think this has a lot to do with staking, and some of the laws that are coming out that are enabling the ETFs to start staking and things like that, and locking value very long term. I think actually that's going to be more creative than just layer 2, because just so you know, layer 2 it's such a fractional thing. It's extremely small profit for Ethereum, and it's very convoluted when you get into it. But then there's still scalability even within that, and we saw that happen. We see that happen in these liquidity events themselves. So AVAX Maxi from that perspective. But again, all these things are extremely volatile, and it's not unlike crypto to see flash crashes like this that in the grand scheme are extremely micro pullbacks. And no, I don't have 9,000. I have 7,000 on my bingo card.
Okay.
There it is. So I have 73. I mean, at most 88, and it's possible, but that has to be, this is like massive legal changes. And if and when this whole thing, that's if and when this whole thing breaks out. So we're not quite there. And you can start calling that when we do have that full-blown breakout. And that's going to look like, again, 5,000 with a pullback to 43. And then, then this is happening. And then we're going to hit 75, 73, and we're going to have this trajectory. And then that trajectory. So I don't know the timeline, but that would be like the biggest bull run. That would be a big bull run, but it's very much possible. Because again, rawest form of supply and demand that you can find.
Tassie, what do you think about?
Sorry, so those are just my opinions. Again, I have lots of them. I'm wrong a lot.
Well, you've also been early crypto since what, like 2012. So I think you definitely know.
Yeah, I mean, last time I bought actual crypto, like Ethereum was 125, maybe 115, around 125, 115.
So it was almost 10 years ago.
Yeah, I mean, dude, I've lost more keys than I can remember, bro. Like really, I'm one of those guys that I don't even know how much is lost. And one time I opened up a wallet and I found like $50,000 in some random token. I was like, whoa, cash. See ya. So definitely consolidation right here on Tessie. Constructive consolidation, but concerning at the same time. I think this is the bit of a double top, rough right now, but fully intact. What I'm looking for these SMAs to really kind of start to come in, and they are, right? So I think that this can get choppy, right? And 415 was the level. It still is the level. We haven't tested that 415 level in quite a while. 415 comes from, you know what, let me just do a solid white line directly across. It's such a big level. You know, this chart shows a lot of time, but it doesn't show all the time. I'm going to pull this back for just a second. And, you know, story of price action. I'm going to go to weekly. 415 is way over here. 2021. And so this is like that AMD level also. And we'd even breached it slightly over here. And so this pullback retest bounce up off of it is fine, right? So this 415, I think, is perfectly fine. A pullback to 390 is still fine, right? For this trajectory to 5s and ultimately 6s in, you know, mid to late Q2 next year. But again, from the lows, I mean, we're doing okay. And even if I don't make that target at this point, I mean, I'm okay still. But yeah, I think sentiment is good. And this is what I would like the crypto chart to look like when Ethereum finally breaks out like this, and I have like a legitimate, okay, we've breached, I can see a pullback, and then I would see this happen. And we're in, baby. So the next big pullback that I get on Tessie, if I see that to 390, I think I'm going to start reloading, bud.
I don't blame you. I think the compensation package also, to me, fundamentally is bullish.
Yeah. So I think that's where I'm at. So 415 is for now going to be that critical pivot. It is acting like support. Can it break? Yes. And if it does, it will be a violent break. But ultimately, I think that ends up being the dip buy that would be nice. And the broader uptrend is fully intact. And the longer this goes sideways, so this is the broader uptrend. Let me just make this bright green here. Is fully intact. This since what is that? The recent lows in here. This is the current trend. And the longer that this goes sideways, the higher that dip potential becomes, and that's healthy. This is actually healthy. And so even a dip to 390, before, when you asked me before what a dip could be, I would say 360. I'm not going to say 360 anymore because this uptrend is catching up with price action the longer that this holds in this general area. And that's what's good about, that's why this is healthy, because as this catches up with this, you know, prevailing uptrend, this can continue to go sideways for a while, like to the end of the year, a while, and then boom, bounce. All of this is possible, but it's not in an active move right now, which means wait.
Okay. That is fair. Jason's Twitter right there in the chat. Before we do the next one again, please make sure to follow him. He is here with us every single Tuesday as we break down the technicals. Rocket Lab, great earnings, lost all of their gains, but down from 70. By the way, it did get upgraded from 2 different analysts to 75, which I thought was incredible to see today.
Rocket Lab. I mean, did you know that there's been like this, there's a setup in certain times in the market, there are certain setups that start to show up. Right now, one of the setups is like a breakout like this, and big breakout, and an extremely disappointing pullback that ends up shaking out a lot of people.
Yep.
Which also ends up being a massive dip buy. That's actually one of the setups in the market. Did you buy this 46? I mean,
that was last Friday. I did not. Matt did. He bought 47, I think.
See, that's what I'm talking about. Like that's a big breakout, massive, incredibly disappointing pullback, which ends up being, I mean, my God, hold on a second. Dude, is this in classic Rocket Lab order? Dude, 25% in 3 days.
And then gave it up. Yep.
Dude, it's still doing it. But this is actually a good hold. $50 is a solid hold. If Rocket Lab can continue to hold this, I mean, I would expect, so remember this was prior resistance. So this is good stuff, right? So when you see prior resistance, which was $50, right? That is resistance. $50. And it only had one test right here. If this can get tested for a while, even down here, 45, by the way, is this resistance. So let's outline this. Dude, remember doing this same exercise on Rocket Lab at $16?
Yep, I remember.
Like my lines are still here from us doing exactly this.
That was during April, and that's when we were seriously buying.
Yeah. So 42 is like the absolute lows. That would be a very disappointing pullback, but I'll pull the trigger at 42.50. Full stop.
Yeah, below 45, I would definitely think of adding. I mean,
because dude, let's be real. Tell them why. Because you want to get a better price than Matt on the last dip buy.
No, because my average is 26. I'm like, dude, if we're approaching the high 30s, low 40s, then screw it. But like, I can't. It's hard to buy at 60, 60, 58. Like,
yeah,
it's not easy to buy. But okay, grab.
Yeah. I mean, so this is interesting, but I think this. Look, I don't think you have to rush out. Rocket Lab, 3-month typical consolidation. I think you want to know are we in the fast mode?
No. I just thought you were.
Yeah. And over here, this is a extremely long consolidation. So maybe let the market, catch up to this. I think between now and the end of the month, as long as is Rocket Lab a story company?
What do you mean by story? You mean like a narrative?
Uh-huh.
I mean, there's definitely a space-based TAM narrative, but they're executing really freaking well. They've got a hell of a multiple based on that execution. I mean, I think if I had to sum up the narrative, I would say a baby SpaceX. And that's what's getting a lot more people interested. I mean, even one of the analysts today said that we think this is the only alternative to SpaceX. But obviously, they're executing very well. I mean, dude, they're 3 cents away from being profitable, too.
Really? Okay. Yeah. Well, there you go. So there's the channel. It's very tight, very high, steep. It's super steep. So they have to continue to execute or the whole storyline falls apart. But yeah, a breach of this trend line and quick buy up is interesting. 65 is, I think, where it would be. But yeah, I think this is going to build a new structure.
You guys are saying Neutron got delayed till 2027. Is that true? Is that what they said on the call yesterday? Because that could also be, but then again, it was up 12% in the morning.
Yeah, I mean, some things like that on a chart like this, like then you're gonna get absolutely shellacked.
26. I mean, but that's not really a delay. They pretty much said it was happening in 26. So, but yeah, that's fair. Okay, cool. Grab. What are you thinking on that one?
I never got filled on that last limit order.
He texted me. He was like, I bought Grab. I was like, oh my goodness.
I did. I mean, because I was upset. I put a limit order at 520 something.
Yeah, the lowest we got to was what, 543, I think.
Yeah, and then I said screw it. And then so I bought it. But yeah, left to right. There's your bullish pullback. We're holding, but we're stuck at the bear zone. So and then the bearish pullback is like right here. So opposite direction here. So the bears. You guys remember this exercise? We've been doing this for, I want to say years. Have we been doing this for years yet?
No. About almost a year. I think we've been doing the show.
Okay. So this is your box in between 618 and 545. This is the box. Grabby grab is in the box. And the box, just as an aside, is actually a bullish box. It is over this general area. And if we pull it all the way across, it is over. And this would be, when you look at this from a higher time frame perspective, you know, everybody wants to fast forward and they want like this big breakout, right? But like when you look at this at a weekly time frame, you're like, I mean, dude, this is pretty constructive. I'm just saying. So yeah, man, I like it, but I don't think that you should think of it as like I don't think that people, and I know that you say, I believe that you say this all the time too. I'll reinforce it. I just don't think that people should think of this like as a moonshot. It's not a moon mission stock. It's just not. This is like a slow and steady personality of a stock. You know, there's going to be dips. There may be at times disappointing dips, but over the course of the next, 12 to 24 months, it should be grinding steadily higher. And this next phase of what that will look like should be 725.
Agreed.
Will you agree on 725?
Yeah. I think 750 to 8 is fair value. That's where all the analysts have it. So it's going to take some work to get there, but I think it can.
Well, what I'm saying right now is that's the next move on this bad boy. And for all intents and purposes, you are well on track. Even though it doesn't feel like it at times, you know, zoom out, look left. It's very much there. It's just building.
Chad. It is just yes, sir, and you.
He is, dude. I don't know what his deal is.
He loves it, dude. Chad loves technical teaching.
You like see what I'm talking about?
When he tunes in,
he's gonna say anything now.
Dude, he leaves focusing on Palantir to just stare at us, looking at candlesticks. Like he genuinely, I'm not even lying, bro. He genuinely enjoys. I am lying, but he really does like TT. So,
dude, what's up with the beard? Are you growing this out?
Yeah, I think I don't know how much I'm growing it out, but it is.
Look at that.
It's thicker. We're background noise for Chad.
It's thick, baby.
Yeah, I don't know how large it's gonna be, but I haven't grown it out in a couple of years, so I'm kind of just like, well, let's see how far it goes.
Letting it go.
Amazon.
Amazon.
They had a great earnings.
They did. Okay, so how this works, whenever you have a power earnings gap, there's always a setup, right, in technical land. And the setup is you get one shot to break the highs. Luckily for Amazon, it did break the highs on that one shot. If you don't, by the way, and that's a forever thing. It's not an Amazon thing. This is a forever and always things. You get one shot to breach and break the highs, and you must do it. And if you do not do it, then you go into a minimum of a 45-day sideways price action hold, if not breach in its entirety. You didn't hold though, and that's the problem. But where this goes, what you do is if you don't hold, or even if you don't pull back, if you don't breach, is that you take from that moment that the market got the news, the earnings, to the high of that day, and you draw a fib left to right. Again, it's always left to right. It's not bottom to top. It's not top to bottom. It's just left to right, whatever it happens to be. 50% of that move is boom, smack dab at 2. Look at that, how this works. 239. A failure of 239 gives you a 65% probability of going to 235. We did not have that happen, but that does remain the bottom dollar kind of basement buy at 234.03 of AMZN. Right now, what's happening is that you're going to get another shot to break this high. That high is 255. That's what's coming in hot right now. Does it break? I do not know. If it does not break on this shot, it will come back and it will very likely hit that 235. And I know that's feels like a long ways away, but my gut is it actually may get kind of up there and chop a bit sideways. And that should take you to at least 262.25. And that 262.25 will pull back to 257. This will hold, and then you're boom into 275, which by the way has always been the target on AMZN since this 186 breakout. It got a little rough patch here, and this not that 186 breakout, I'm sorry, this ginormous, since you guys love these patterns, and I keep saying I'm not a pattern trader, but I do know them. This is a ginormous cup and handle. That's where this takes you into Q1. Go back into the timestamps, go back into the TT library. It's there. Is and has always been the targets. How we get there, this is how it is. So yeah, you're on track. Can it do another little dip buy? Can it pull back? For sure. This looks good to me, man. It looks good. If I get pullbacks as close to 245, maybe even below that, I would be a nibbler in that general area.
Okay, there you go. That is pretty much it with the main ones, guys. We're going to get into rapid fire.
300, by the way, is your max.
Gotcha. Yeah, I think that's what you said last time as well, around that 285, 300 range. So rapid fire is, 2 minutes 30. And so we'll try to do as many as we can.
How fast I am on this.
Oh,
I'm getting good, dude.
Please do not spam your ticker. Trust me, we see them. We're going to try to do as many as possible. I'm sure we'll miss a couple, but we will try to get as many as we can get. Yeah, let's start off with RIVN. I mean, and by the way,
it's Rivi. We just RIVN. You know, the next two 10-bagger potential plays was the Rocket Lab and the RIVN. You know,
look, dude, you've been calling this thing since like $8, so I'm happy.
It's my girl. You know, she's sometimes stunted, but it is what it is. 1285 is and has been support for forever. I mean, dude, patience is a virtue, I guess. Yeah, I think that's where we're going. 23.
Do you know why it's up? Do you know why, or it's just because I didn't see?
Yeah, well, I think right now. So did you talk to them about January effect yet?
Oh no, you could talk about that.
Oh my goodness. So I think it wasn't up on earnings per se, but they have a lot of catalysts coming. So number one, R2 is coming. Number two, I think there was a lot of trepidation, if you will, about the battery stuff like lithium and things like that. And what RJ did say was that that's not going to be a problem. And so I think supply and demand not being an issue is a big deal. I think that's those two things in combination. I think 2027 is kind of in my mind was always, there you go. Oh, you zoom in the January effect.
Yeah. I mean, RIVN's not a small cap, but still it could be
It kind of is in the high beta.
Yeah.
Yeah. 22 billion is small cap to me, baby. It is the sweet spot. So to me, I'm looking at that spot. So it's still got some work to do. So this is nice to see. I'm at an average weekly range. Did you know that my buddy over at Granite Shares, ROVL, dude, they
have a leveraged Rivian.
Oh my God, they give me this 2x leverage Rivian, and I'm like, are you joking, man?
You're definitely gonna buy this and hold it for like the next 20 years. Like I know you.
I am not gonna do that. That's what a degen would do. Look, Rivi's got to get over 1881. I think you can get a little bit of a stall there. It's hard to chase this, but you know, this is a big move. You're getting close to the highs, 18 something. If you get there, I could actually expect some kind of pullback to 16s, and then I would want to see some kind of sideways price action, and then a push with a small, something like that. It would suck to see a big disappointing pullback, but even if that happens, you know, also true. 1285 remains support on this. We're just in active breakout mode is what we are. And so if we can get through 1860, well, in that case, then it should be a straight shot to 23. Really. There's a massive from here to here. That's a big deal, but it's tough to chase it here because you haven't even broken through this ledge. I say ledge, this order block yet.
Okay.
So we're just gonna be testing this. So, did they actually request that?
Yep.
Oh, you didn't tell them I bought it today.
You did? I didn't know you bought it.
Yes, you did. So I text you.
Yeah,
I text you, and you don't listen.
I forgot. Okay, well, you're in.
I might have gone a little bit early if I'm looking at this. I had where did I need to pull up my. Damn it! I might have bought it a little bit early. I don't know why my son of a biscuit. Why did my chart look different earlier? I think I went early. Maybe I didn't have after hours on. Damn it.
Yeah, that could be.
No, I think we're coming in real close. I did it. I did the deed. Dude, I got to pull up my thing. Why does this chart look totally different than what I had? What I had was, there, that's what I had. I had daily. So what I'm going to do is clean this up and actually go from here to here. And this is going to be a breach level there. So right there is off of this, because I was looking at daily, and now it's adjusting. Okay. Whew. I was like, what's happening? All right. So I bought it. Amit told me that he was going to buy it sub 40 anyways, and apparently he says things and doesn't do what he says.
Definitely did not say that. I understand that you're buying it. But
3 weeks ago, when Hims was up here and it was set, and you sold it, said we were talking about it, and you're like, well, if it's under 40, I'd probably buy it.
Yeah, but now it's actually under 40. So, you know, Nebius looks a little better here. That's all.
I mean, you said what you said. Anyways,
I'm just not that excited about the business long term.
I kid. It's so January effect is it's very much small cap kind of stuff, right? If you don't know, it's Russell 2000 seasonality, right? And the reason like a Rivian, a Hims kind of thing, right around here, this is like mid to late November, usually is the dip of all dips. So here's October, you get a little breach mid to late November with a push and then a disappointing pullback in December. which is the big move for Russell 1000, some Russell 2000. This is like 50-year data. So that's what the January effect is, just as an aside. And this is almost exactly that. So what I'm looking at here is that little breach post October or September kind of lows. I'm looking at this kind of liquidity grab. Definitely, if this gets back over, then this becomes that quote unquote liquidity grab, right over $40 and some odd cents. And to me, I'm just looking at this China trend line. I think that vol is still high on this. All right. But this looks good. It can come in still a little bit, 37s and maybe even smaller. But if the story still remains, look, Pfizer got Metsera approved. We got more stuff coming on the market. That's probably going to be more stuff for him to start selling. To me, I mean, I'm still not on any of these GLP-1s, and I probably should be. But yeah, I don't know. I like it. Okay. Unless I'm not paying attention and the story has actually changed, the chart actually tells me to go ahead and take a little shot right here. This is going to be invalidated if this fully breaches and goes like that. But for here now, it looks like a spot for it to bounce.
Red Cat.
Speaking of, we do this. Oh shit. Red Cat.
Yeah.
I guess it could go in that same bucket of January effect type stocks. Russell 1000. Ooh. I don't hate this.
This is definitely could be a January effect stock for sure.
Oh, I don't hate this at all.
You know this company? Drones.
Yeah, drones. So I'd like to wait till after these guys report earnings. These report on the 13th per TradingView, which, by the way, TradingView absolutely sucks. So I would definitively wait till post earnings. And I don't care if you forget about if you think they're going to have great earnings or not. This thing has been an absolute dumpster fire on earnings. So I would not, at least from whatever these little red dots are on my screen. I don't know how accurate that is, but the price is a good spot. If earnings pulls back and you have like a disappointing pullback, even in the sixes, and then you see it quickly reclaim, I would expect that to actually be a buy. 770. So what I just did is I grabbed what's called a fair value from that last area right over here, 682. It doesn't have to happen, but this is an interesting 684. Anyways, this general area, as close to 7 as possible. But right now, even that 770, which was a prior all-time high, holding that level and massive pivot since inception on this stock, that's a big deal. So a breach is just that. It's just like one kind of thing. But look at that. I mean, that was support, right? Like this is clearly resistance. Clearly resistance. And yeah, I'm just like, if it comes down, breaks that kind of support or whatever, but even quickly gets reclaimed back over, that's going to look good. So this general zone takes me into this box right here of real support, which is where that kind of area came from.
Okay. Celsius, which got schmacked.
Oddly, Celsius got like an extra 300 million CELH anonymous investor, right? 300 million shares. Did you hear that?
I did not hear that.
You did not hear that. Dude, I thought you were an analyst. What's happening?
300 million anonymous? What are you
shares. 300 million share anonymous investor or something. I don't know.
No, it's a buyback.
Is it buyback? I heard something about it. So I wanted this to hold over 60. Wow, they did get shellacked, bro.
I know. And it's still up 60% this year, even after that. Which is kind of crazy. It was beating every single stock pretty much for the year. Yeah, it's share buyback.
Did you see Monster Beverage too? That thing is like starting to rip again.
Yep. That was up 3% today.
Let's do this. So we got a big move. This is clearly a structural recovery. Left to right. That's it. Left to right. Measured move. I want a good pullback. I want to get this top. So we have double top of death, if you will. Gives us a pullback. I am on it. Shoot. It's a good spot, man. This is the setups. I mean, so this is the definition of an extremely disappointing pullback. Would be into that 37s. Spend a little bit of time consolidating back over here, right back up to the high. All right, 37.25. I'm gonna buy this. I said that.
I mean, you've always loved Celsius, though.
No. I didn't like it for a long time. But this is when I sold it. I remember I sold it actually right here or something.
Yeah, I remember.
No, I might have sold it here after like nibbling or whatever over here. And I was just so frustrated because it was nothing but lower highs. And I sold it. I sold it here. I think I bought it here. And then I sold it here. And I didn't look back. I was long here, this whole thing, but I didn't look back after selling it here, which I should have, because there's this big, this is the bony frill. Oop. Right? You get that rhinoceros, and then you get the bony frill, which we know we play both sides of the triceratops. And so that's how that works. But that would actually end like right in here. So this is the 50% pullback, which is good. It's a spot as close to 40 as you can, but this is fine to start. Literally, this is okay to start here. You have that, like, it's like a 65%. It's a real probability of getting into that 38 if you cannot get back over 45. But this can be the low, literally right here, right now, if you get back over and hold. It's possible to get into here. So this is starter, this is dip buy, and this is throw it in the garbage.
Okay. Oracle.
I can't believe I just said I'm going long Celsius. Oracle, I don't like it. But
they've lost their entire pump since September.
Oh, and then some. It's not that they lost their entire pump. They lost their entire pump and continued, which, like, that's not cool.
It's almost like the street doesn't believe any of their RPO growth from the OpenAI contract.
Yeah. So if they lost their, yeah. So right here. So this is the same. So remember what I just said about this big earnings gap things, like, so it's from here to here, and it's always like this. You get one shot to break the highs. If you don't, you go instantly, always and forever, into a 45-day. This right here, that's 45. That's 40 days. 40 plus day consolidation. That's what's going to happen. You draw this 50% retracement. You will have this, what we call golden pocket. This is called the golden zone. That 295, that's the halfway point. So you can chop in here and you'll have this other one. But this is very likely going to be a disappointing lower high, which is exactly what that was, and preceded the next very quick failure. And when you lose this 270, when you lose this 270, it's that moment that you know it's no longer 65%. This is like 90% probability that you're given the entire. I mean, I put like money behind this, that you're losing the entire thing, full stop. And that's what happened, right? So you lose this and you get that, you're losing the entire gap. And that's the gap right here, full stop. And so the only thing that's going to save this is if you get back up and over, which again, I'm not seeing this and I have no interest in buying this dip. So yeah, I don't see any investment. I don't see any investor sentiment showing up here in the form of like good price action. The only saving grace here is that practice of like, if this is the actual lows, then the low before the higher, like the absolute low is literally 228. And that's where it stopped recently. But again, in this scenario, I have nothing but a downtrend and a series of lower highs and lower lows. So at minimum, I must have a break over 241. So I'm just manually drawing because it's faster for me right now. At minimum, I have to have a break of structure, which looks exactly like this, up and over 250, pull back and hold 243. And here, not here, but here, if I see buyers step in here, then and only then can I consider going long.
Agreed. I do think it's interesting here, but I would wait for buyers, as you're saying as well.
Yeah, at least that's what the chart's telling me. Fundamentals can tell you whatever they want to tell you, but the TA tells you when.
VG, any thoughts on this one? I know you probably didn't keep up with their earnings, but
their earnings.
Yeah.
I know. I just know this is Chris's.
Gas play. Yeah.
Is Natty Gas?
Yep.
I mean, I like Natty Gas. I like Nat Gas as the actual real thing that's legitimately going to power this data center situation in reality, not nuclear. But wait a second.
They had an arbitration case with BP. I mean, there's a lot of fundamental stuff there, but
okay, that's what wasn't it? Now I remember. So wasn't it? It was not. It was so BP is one thing, but wasn't it that it wasn't just BP? How many other potential arbitration cases are there?
I honestly don't know. I know.
I think that's the question. At least the stock is telling me that
Shell wants to go back to court today. I mean, that would be two.
Yeah. So if they lost, so that's the question. If they lost a case to BP and they had four more, okay, so they know. So
that's
there it is.
Wild, bro. 4 more of these things.
So there it is. That's your risk, and that's what I'm seeing in the chart.
That's aggressive. Yeah, I think that's what you're seeing in the chart as well.
Yeah. So that's what it is, right? So you have to know, and then you have to quantify how much that's worth. And then you fundamentally come up with your valuation there. Because once the courts set precedents, then that's a thing. This is the current low of 676, which is holding. So that's what it is. But how long does it hold? I'm not sure. It doesn't look like it's going to hold. If it was going to hold, I'm going to call this a breaker structure. It has to be over 864. So again, simple terms, if this is the absolute low, then this is the low above the very last low. It was constructive, but this is what I mean. Like it's a series of lower highs and lower lows. This is still another lower low. The fact that this acted as resistance, which comes back from here, and all of this, and even this recently, this has to reclaim before you can think about this reclaiming and about this being an uptrend. But it's a definitive downtrend right now.
IREN.
IREN. I'm scared about this one. Yeah.
What are you scared about?
I was scared to see if it was like a moonshot or what. Dude, I'm not sure like if it's possible is it possible that like IREN turns into MSTR 2.0 because everybody else starts copying them? Like that's what I don't know.
Well, but there's like something real in the data centers versus.
Dude, there was something real about MSTR, right? Like,
but the copying the treasury strategy, it just feels fake compared to like actually getting deals with Microsoft, for example.
Yeah.
Ooh. Now, granted, I don't know if everyone can get a deal with Microsoft, but I get your point.
This actually has a problem.
By the way, it's still up 5x even after this 10%.
I mean, okay, but it doesn't. So, not to be a dick. It matters where it's going, not where it's been.
That's fair. That's fair.
So this is bearish. It is not bullish. So you have a double top here. You have a little bit of a head and shoulders, whatever. And this is actually starting to play out. This will be invalidated over 65.53. Not before then. So IREN is a very volatile stock. I'd say 65 just to be in the clear. It's a very volatile stock. So it can be 65 today and then 55 tomorrow night. And so what I just did this downside measurement. So the reason I said that is that the deepest bullish pullback that one from a technical perspective would be willing to accept this trend to hold is 58.76, which it did hit on Friday. And now we've actually breached that. So this chart actually requires a little bit more work. There is, I guess, this, which you're barely on. So this must reclaim instantly, which is possible for something like an IREN. But if this breakdown happens like that, then we are looking at 47 and a new trend that is created to the downside. And then in that instance, I would start looking at what a downward channel looks like, which on the screen here looks about to be 39. But that said, it's not over till it's over. Although we don't want it to be a BMNR type situation. The upside here, if this does reclaim all of this, with the key level being 65, cool. 65 would be the first one. And then 70. There's a couple situations. So it would have to get to here. Green lines are pathing. And then it would have to get to here. And these are small lines because every one of these is going to be possible pivots as well to the downside until this is out of consolidation, meaning that if it doesn't continue, each one of these can do this and the whole thing is still at risk of losing the downtrend, of losing the uptrend if it doesn't actually get through. So all of this can actually happen. And then it could still do this, but this sets up for chop, chop, chop. This trend line is going to be of paramount importance moving forward, this longer one.
Okay.
It's very steep though.
SMCI.
Dude, what a shitco. No, I mean, I like SMCI fundamentally, but technically it has absolutely. So my fundamental story is still like keeping it at the same spot. Broken trend here, did not break out, but it's basically when something like this happens what it is like, okay, I can have a fundamental thesis, which by the way has not changed. But the technicals are telling me like, all right, well, dude, your timeline is off. So similar to like a RIVN, I mean, it's the timeline that's off. Right now, I'm literally on it. So like, let me clean this up. So this is the absolute spot, like the absolute lows of here and here that I would be willing to accept. And I know I had it differently before. What that, oops, wrong one. What that is or was is essentially taking this here, because again, they're not like fully hard lines in the sand. Why is this? Dude, I don't know what's going on with my chart where it's like not adjusting right. Make sure I'm not in like logarithmic, regular.
I think the thing that really hurt them was the earnings guidance, but it's so funny because they already.
It's so dumb, dude.
Told everybody. So it's like.
It's not even that. It's that like, it's irritating to me because like I can look at their bookings and it's still like, it's legit. Like the market doesn't believe that they're going to book. So there's a difference between bookings and recognized revenue, right? So coming from the enterprise, to me, if I get a PO, I'm getting paid. And it's not like that in the stock market. They got POs, they're getting POs, but they can't put that on the earnings paper. Like it's not going to show up on an accounting statement. And because of that, like the market's it's basically not even counting any of it. So anyways, long story short, we're back in the muck. We are here, that 49 area, that was a big deal to lose right there. And I think we're breaching this little blip right here. If this falls apart, this is 33s, which is what it is right here. And this little pop up here without a failure in my group, that's like, that's rough. I actually I had debit spreads on. I just uncovered my debit spreads because like right here, right now, this is my spot. Like this is my spot of like, if we're going to go and you're going to bounce, it's got to be right now. It wasn't even today. It was actually this day. So my stop is like literally right now, 38, but today would have to be a higher low. And I just on a very micro level, technically I have a small breaker structure, but I'm stretching, dude. I gotta be honest. That would be a stretch to say, all right, we have a higher high and a higher low, but that's what it would have to be. It's such a small time frame. Like it's not that big of a deal, but this is where it would have to be. And we would have to see this back up over, but I don't think anything's wrong with this company. The market does not like the stock though, but I ain't going anywhere.
So how about Micron? This is a semi that is really just massively outperformed.
Micron, yeah.
What are you thinking about this one? 250 all-time highs.
250. See,
look at that chart, bro. That's just gorgeous.
That's crazy. Like, so this one, I can't really chase this. It's just a channel, like straight to the upside. You can, but I would do it at 230s. You could take small little pot shots. This is my thing. Like, I just feel like that's so dumb on SMCI, so dumb. But I can think it's dumb all day long, and the market is just going to laugh at me if it just keeps going down. So, doesn't matter. I'm definitively still long SMCI, but not as heavy or bullish as I was before once that didn't continue higher. But I still like it. Yeah, this would be kind of like that channel. It's 237 to, what is that, 228. The only thing you have to be careful of, like, so this can do this and you're back to the highs. It's just a simple channel is all this is. It's if you lose this channel that you're looking at something like that. And if you were to lose something like this, in this instance, I don't even think I would measure anything because that's going to just be a horrible fall. I would actually take that short if it did lose the channel. But that's from 158. So it'd probably be a pullback into 190s right here. But you're well within it right now. So I think you just ride this. As long as you're making that series of higher highs and higher lows, there's nothing wrong with this. It's just continuing on this 45-degree uptrend, which could take it considerably higher. Let's see. So if this whole thing is the breakout, we are here. 257 is actually the extension, dude. Did that just hit? 257 is the extension.
Got pretty close.
That's oddly it. So 223, if it 223 is like a deep pullback, it would be like this. So 223. And then if it loses 223, then you're looking at these chop zone. I don't know.
Okay.
Yeah. Unless it's over 228. If it's over 228, I don't mind this run.
Oscar.
I mean, this is so tied to the ACA extensions. So epically tied to the ACA extensions. Still as close to 14 as possible. That remains. Didn't get up over through nothing changes here. Very much tied to ACA extensions. Once we didn't get that once that doesn't come through in the government shutdown thing, like literally this is what happens. And if it comes back, then it will be, if that comes back, then it'll be boom. And regardless, even without it, this is such a crazy one. Like any way you slice it, it's still undervalued from a like free cash flow perspective. It's still as close to 14 as possible. I don't know if I need to buy more. I don't know. Your time horizon has to be a long on this. I already got it here.
I think so too. I think that this whole shebang in terms of healthcare negotiations in January continues until then.
It's not. It's explicitly ACA.
Yeah.
For Oscar. So each inside of healthcare, it's like they're each different. Like there's like UNH, which is not nearly as tied to ACA, like this ACA extension as Oscar. Then there's like HCA and like which is arguably the new like UNH. Have you seen this chart, by the way? Like, my God.
Wow. They were the pound too. Yeah.
Well, it's the hospital stuff. But and then there's like Humana, which is really not tied to. Anyways, you know what? Chris works in a hospital. He'll tell you all about this. And I've done this. Let me see if I have this pinned.
Yeah, Chris said the same thing.
I've done this analysis in a bar chart and showed like who has what ties to what sector. Damn.
AMD 5% after hours.
Nice. But yeah, I think it matters like who's on what.
I agree. DraftKings. Any thoughts on
I like
this one?
DraftKings.
I don't.
I like DraftKings.
I don't like. Why are they exciting when prediction?
Okay, I don't like them like that. I like it from a technical perspective. They're not exciting. It's a different business model, to be fair. What is this thing? So I'm currently long DraftKings.
Not, dude. Prediction markets are just completely taking away volume from the sports bookies. And I mean, it's not going to kill them.
That's not true.
I mean,
Did you look at their earnings?
Dude, if I didn't have Robinhood, I would have eventually gone to some sports book to
lies. You would not have gone to a sports book. Period.
No, if you kept texting me all these trades, I might have.
I would not. No, I would not have done it. If event contracts didn't work, or didn't exist, you know what's true is that we just wouldn't have played. Period.
But it's not
that
it's taking. I still feel like it's hurting them for some reason. But I get your point. Like, you're right, technically.
Here's how I think that
the fact that they had to acquire Rainbird or whatever prediction, that to me wasn't bullish. That was like, oh, they're admitting that this shit's hurting them.
Yeah, but it's not hurting them 50%. I think that's overdone. So, and still the analyst community is expecting these guys to like double next quarter, which is crazy. Not double, 50%. It was 1.4 billion. Flutter is supposed to report too. We could probably look at that. DraftKings was supposed to be, oh my goodness, earnings.
I think they beat on.
Look at this. Estimate 1.2 billion for Q3, 2 billion for Q4. That was before earnings, 2 billion, and stays 2 billion. That's crazy.
That is kind of crazy. That's Q4 momentum.
Flutter is, let's see, Flutter's bigger. Flutter might be a better buy. No, they haven't reported yet.
I agree with you. It's probably a good trade and technical setup, but like, what's the value of owning a company like this over the next 5 years or 10 years? Like,
it's totally different business. So when you look at DraftKings, and you look at like what their business really does, like when you look at their earnings, it's measured. So we're gonna go over if I talk about this, but it's measured in like if you pull up their earnings report. The stuff that they're going to talk about is hold revenue, which is different than what you're probably used to, right? Hold revenue is like juice, which again is like in the sports world. So I'm like trying to multitask because I had all of this I literally wrote all this up.
I mean, we don't have to go that deep into it, but yeah, I think long term it's not the most exciting. The chart doesn't look horrible. I agree with that.
It's a good spot. Chart looks good. I think if you put this on like 200 week simple moving average, you're here. This is the spot. It was actually, I think 25 was just overdone from, again, like absolute lows to absolute highs. That 32 was that 50% mark, but below 32 it was 25.38, which is like literally exactly where we got. So from here, what you expect is you expect a little bit of a chop. And if DraftKings can get back over 32, it's on the mend definitively. And when it's back over 32, you should expect 36s and essentially back to at least the 200-day and probably all the way back up to 42. So from a trade perspective, that's why it's interesting. Not even interesting. That's why it's juicy. From a trading perspective, from here over 32, you see 37.50. Over 37.50, you see 41 and change for sure. And then if it continues, it can get crazier. But without going that far, let's say from 32 to 42, that's just under 30% on equity alone. That's juicy from a trading perspective.
I agree. Lily.
Dude, whatever, like, turn around.
It's almost a $1 trillion company, dude.
Dude, I mean, it is all time. I thought this was going to stall longer at 900. I bought this. I think it was somewhere 800 recently. Because like this is like biotech, this biotech space, and why January effect even came up. Underneath the hood of the market, the biotech space is in a stealth breakout mode. I mean, J&J, Merck, Lilly, like these tickers that we don't ever talk about on this show. Mega cap pharma is on a stealth rally right now. This is not small. This is actually pretty big. And over 800, this bad boy was actually legit breaking out. And here we are. This is full blown. Okay. So 1150. 1150 it is. It's got to hold over 970, that prior all-time highs. And it can dip in the meantime to 900s. But yeah, that's the general trajectory. This looks really good, dude. This is like NVIDIA breaking out, which it's not, right? But so this is very bullish. It's a very bullish chart. And I mean, again, why I even asked you if you talked about the January effect, because under the hood, how you know this is not a bear market is you see stuff like this. We're not seeing money flood to the dollar, right? We're seeing money flood to growth, but in other sectors of growth and just other sectors, right? In a bear market, money just floods to cash and you see the dollar ripping face, right? Yeah. That's not what we're seeing. You look under the hood here and we're seeing the market broaden. And that's what we started this whole segment with. And this is bullish net, right? Even things like Merck. Okay. This is a crazy reversal, like starting. I don't talk about this. Like we don't talk about this stock, right? I mean, that is a crazy type of reversal starting. Again, another potential 20%, just a bounce, regular run-of-the-mill bounce, looking at 20% here. You look at like a who cares stock. When was the last time you looked at J&J, dude? J&J all-time highs, right?
That rotation is healthy. I agree.
We have never talked about this stock on this show, right? Yeah. But here you go, right? I'll talk to you guys about J&J. This thing is crazy. This is heading 200 and then some. But, it's been stuck in the mud for a long time. I'm actually really upset about this J&J stock right now because I was watching this stupid chart for I don't know how many years. I'm on a rant. And this is 3 years, by the way, 890 days. waiting for it to bottom, and it tested this 1, 2, 3. I countless times, and disappointing pullbacks. And I just got tired of watching it one day. And of course, that's when it decides to go on an absolute bender and just goes, I mean, in the last 140 days, 30%, which is a lot for J&J. And now, after they're done with the whatever shenanigans, 170 was that kind of pivot, and we're looking at a $215+ stock, which has earnings coming around the corner, or like in late January. And this is well on its way. J&J was up like, I don't know how many percent today, 2.8%. Doesn't sound like a lot. That if you're used to trading big tech, J&J doesn't move 2.8%. It doesn't move 2.8%. Like I'll pull this up, Pfizer, right? If Pfizer can actually reclaim $26 and get back up over $26 and hold, this could look Pfizer, AMD 2.0, right? Like in terms of advanced money destroyer, I've taken my fair share of shots on Pfizer. I'll just let you know that right now. I legit just took another shot on Pfizer at this 24 level. But you look at this Metsera that has changed the narrative, right? Them getting that Metsera like approval, like they're in the game, which was, by the way, always part of the plan. They were supposed to have all kinds of stuff happen. But I mean, the freaking Pfizer CEO shows up. Did you see him on CNBC yesterday? You did? Did you see him drop an F-bomb on CNBC?
No, I didn't see that part.
Oh yeah, dude, hilarious! Like I'll be down investing in a company with the CEO drops an F-bomb on CNBC.
He said that on TV live. He said that.
Yeah, in front of Kramer, dude. Like with his accent and all, it was hilarious. And it was about the CGen acquisition. But this is a big pivot right now. This was a big hold at 24. I'm on a weekly chart, right? It could be. I just shut up for a second because I don't want to get. It could be like a generational turn. It's not yet. It's early, but it's definitely something to watch.
All right, Jason, we have like 15 minutes left, so let's go to rapid fire. Let's go to 1 minute, so we can try to get as many tickers, and whatever you got on some of these tickers, we'll do that.
Where's my 1 minute? No.
We'll try to get these last 10, 15 in, guys. Again, Jason's Twitter right here in the chat and his YouTube. Please make sure to follow him, as he's with us every Tuesday for free. Okay, App Lovin'.
Oh,
you gotta get some time. It's doing that thing again. There you go. I think that's
okay. So I think this one's a little challenged, but it's possible. Yeah, there was a thing. I don't remember what happened to them. There was something that happened to them that is a big deal, and I probably need to know more about it.
SEC probe.
Yeah. Okay. So SEC probe. So big dip to 577. That has to hold. I think it's going to be very dependent on that kind of news. If it doesn't, the next level is 550. But here now, this has made massive moves. Yeah, it's 553. If it loses 553, it's in a lot of trouble. Down to 450s. Which sounds like a lot, but for App Lovin', it's probably not that much. If out of the, if it can hold over 569, then cool. Like it's constructive. Obviously, we have 560 or 660 resistance right now. So you're not going higher yet. Right now, this is the box in here. Cool. Next.
Ondas.
I mean, so a lot of these have like completely bottomed. Oh yeah. So this looks like that January effect chart with like that really disappointing bottom. I think if you have a chart that looks like this is going to set up where you have a possible spring. But if you have earnings, I don't want to get in the way of that. Like, you need to I don't want to tell you what to do. I don't gamble on this. I would skip this because, like, this has got earnings. I think this is small cap. It could get shellacked, like, and then bought right back up. So a shellacking could be definitely in place to like $4, and that ends up being a buy, and then it's at like $7 the next day, on something like this. But I think this is going to be sentiment, right? So if sentiment can actually hold, you got to wait. We're skipping on us. It's too close to earnings, too small cap. It's going to move somewhere.
Unity.
Post earnings again. So you get one shot. You did make it, but you're not holding. So the shot is good. It's not great. Yikes. I don't think that's a good shot, actually. So the way this is going to work, earnings from here to here, we already had that go. It's going to be 40. I would stay away from Unity. $40 you're going to chop. You might take another shot, but if that next shot is a lower high and it stops somewhere around 42, you need to get out. So the chart would say you don't need to get out. The chart would say that it's going to come in and do another pullback, and then you do you, right? And then it could do that, right? But if it doesn't make and hold the next high, then it's got to come back lower and collect more sellers. And how it does that is by coming back to where it came from. Next.
PayPal.
Wow. This thing has been, I think PayPal is going to trade between 75 and 65. Very insightful for the next, I don't know. I don't see anything on this chart.
They have a dividend now.
Yeah, you do have a dividend coming. It's similar. So like this is the base, and you have the same kind of setup where this looks like it's going to make another little pop. But if it doesn't, but if these charts don't make new highs, and this is going to be a challenging new high, if this doesn't make a new high to 85, then expect massive consolidation, right? For a long time until it can make another run.
Okay. ELF.
1 minute's really short, dude. ELF is 68. Dude, this one got shellacked. I think you got a little bit. If you lose 74, it's probably, 69 is an important spot. It's this spot right here. But I'm not seeing you need to see more. I need to see more from ELF. Like a lot more.
That's fair. I mean, tariffs are their biggest issue.
ELF can even get back up to the 200-day, which is just under $100, and
bro, they could pump if Supreme Court takes away the tariffs. Them and Nike.
Okay, so those things, it's not takeaway, but like, okay, yes, it's takeaway. So that's perfect response. Chart looks like ass. Sorry. But as is Nike's, but like in a single tweet example, we're giving rebates to all the companies that were affected by tariffs, and we're going to pay you back. Boom. Instantly. Right back to the highs. And I mean the highs. So it's very hard to be short, especially at the lows here. this is a no touch. If you like it, go ahead and nibble. But just know, like, you're just retesting this little area of 65 to 53.
EOSE energy.
EOSE, it did make a new high. Interesting. So that's constructive. I would like to see a little something like that. So pullbacks to retest the 20-day, somewhere around $15. I'd stay the course here. But unless it can like sustainably hold over 1845, or 19, which it's not, it's just toying with that level, right? 1904. So interesting. That's a good breach, which means that the next higher low is buyable, and that last low is here. So anywhere, I mean, yeah, it's going to be a big pullback around 1636. 1636 is where I have my level. Then I expect it to bounce. Cool. Next.
Upstart.
I mean, that's going to be, I think Upstart is challenged, right? There's something wrong with this chart. When I look at Upstart versus Affirm, there's a big difference in these two charts, and I don't understand. Just pure ignorance. I don't understand. I'm missing something fundamentally is not right here. Do you know what it is? I don't know what it is.
Well, Affirm's credit underwriting, I think, is substantially better than Upstart's, but I could be wrong. That's why Affirm's doing well.
Yeah. Well, I mean, this is 36s. I mean, you're back into this area. I 32. I don't think you want to be. Yeah, you're right into this area. So what is that? Below 35, maybe. I don't have 3-day rule, but I mean, it's not going lower. If it does go lower, then that's what you're looking at. But you need to see, just like everything else, you see one little blip on the radar, same exercise. I'm getting really repetitive here. Here's the low. Here's the low before the low. Guys, look at that. If that holds, cool. Next thing you need to see is you need to see this actually breach. And then over 40, fine. Where do you go? 43. Is that tradable? That's up to you, right? And then 50, maybe. But it's 1 and then 2. If then that, because otherwise, if you're not extending, this looks like it's going to come back. All right, next.
Freshworks.
Whoa, don't know that one.
FRSH. $3.2 billion company. Cloud-based software provider.
Dude.
Smaller one.
Speaking of old school cloud companies, there's a crazy old school one that just has absolutely exploded that I'm just like, I kind of need to look at this.
Confluent?
Again. No. Fastly.
Oh, Fastly. Okay. I've heard of them for a while.
I mean, it's at a spot. I know nothing about these. It's at a spot where it would typically bounce. And it could bounce to 13. I don't know that that's an investment or it's just like a trade. It's going up.
Okay. Duolingo.
Did you want to see Fastly? Have you seen it?
I haven't looked at it in a minute.
There it is.
Wow. Look at that.
Wowzers. What?
30%
50%. Yeah, dude. 50% in a couple days, bro. I'm just saying.
This is an old company too.
Oh yeah. Cloud native. CDN.
Are you long? You own this one or no?
I had to nibble at this. I used to work with these guys a lot, but I mean, I had to trash it up here, but this is, I don't know them as much as I used to. They were a good company. cloud native CDN content delivery network. I mean, it makes sense. And it was like 2 billion. So I'm like, 1.79 billion. I'm like, this can get wild. This could get really wild. And I did no research. I don't know what that is, but that's a surprise 9,900,000% upside surprise. Whatever that is, I don't know.
All right, we got like 5 minutes left.
What was the other one?
5 more tickers, and then we're out. Duolingo.
Duo. I'm scared for you.
Dude, somehow I'm up in the draft and I'm down 60%. I don't know how, but
dude,
I don't know if this one's gonna come back easily.
What's the IPO price on this? 143. I think you see that.
Yeah. 194, dude. That's crazy.
Yeah, it's got to get back over this little blip, 200. It's like your psychological level. Otherwise, I mean, 200, you probably see 185, 175. We should actually start shorting this, huh?
No, I don't think you're short.
As a trade?
Dude, I think it's done. I think the short was at freaking 300, 400, 500.
Yeah, what happened, dude? Why didn't you tell us?
Because I thought the stupid green owl was going to help me speak English, and fucking dumbass bird can't get the stock.
Oh, hold on. Okay, so you do have, I can do this for you. So you do have a clean head and shoulders, whatever. So like, since everybody and their mother is looking at it, we'll just load this up. It's 120. It's 120.
Okay. Last couple, JD.
Oh, JD. Singles Day ends today, but they report, which has already been going on, and they report on the 13th. So it may end up being a sell the news event. Regardless, this is at the level. So trade location, I think, matters. I don't know what earnings is going to say. So Singles Day is like 3.5x, maybe conservatively 3.5x the size of Prime Day, significantly larger. And that is JD's thing. If it does dip, it's 30, and that's probably it. And that's okay. But again, why I'm like, maybe March is not January's. I know that your boy Wujastic wanted it a long time ago with shorter dated. I don't know. There's time, but now you're in the earnings. This is the spot though. 31 right here. That's the primary spot. That's where the big consolidation is. 31.50. It can still do little liquidity grabs to 30 like this, these little blips in the radar, and then eventually get up and over. But same kind of thing where you had highs and then a lower high. That was rough. And then we test the lows. Now we got to see buyers come back in, and then we'll retest the highs. But I think China in general is like more sideways and then break out up and out later after, like into Q1.
All right, last two, UNH.
UNH. So different types of help. Ooh. Buy it.
Okay, move on.
Yeah, I like this. With the I wanted 300. I didn't get it. I thought I was going to get 300. I got 313. What a greedy. They pulled another emit, guys.
I've actually been thinking of UNH too now that it's back into like the 310.
You got to have a super long time horizon. But this was the box that UNH was trading in for a while, like right over here. And then it actually was here. And so if it can get out of the box, which it's trying to right now, that's what happens. It gets out of the box. Right now, we're just kind of locking in that higher low. So extreme low to extreme high, measure move, watch what's going to happen. That's where my 300 came from, 307. So I can still get that 307 if it comes back in, which is why I didn't add 307. I would like that. But this is a clean retest of this prior breakout right here. So it's constructive. If you get another dip, I would like that even better.
Okay, last three. I'll give you like.
No, last time you said 2. You're going to be late.
Okay, fine. Netflix.
What are you doing?
I tried to get you guys 2 more. I couldn't. But Netflix.
What did you do?
Netflix.
10-1 stock split. We're doing away with this 10-1 stock split.
I want to buy a share so that when they split, my 1 share becomes 10 and I feel richer. Like,
but just do it.
Like, I've never experienced the stock split. So I kind of want to be part of it. I don't think I've ever had a stock that split on me and I got more shares. Yeah, a bunch of you guys in the chat saying this. Dude, it feels like you're just richer when you get more shares. Like, I've had a reverse stock split. I felt the pain of that. Like 30,000 shares turned to 3,000 real quick. And then they did another one. It went to 300 shares. Like, what the hell is going on?
You're coming up into resistance right now. So prior support, so you're coming up into prior support. So you need to wait. So it's better to buy at support and not buy at resistance, because what you don't know is, so this was resistance post earnings. 1, 2. I would expect this third attempt to be probably a disappointing dip, which ends up being the buy. Yeah, that was my level. And I had 1021. I don't know that it gets there.
I'm buying a share so I can make 10. That's how you make money in this country. That's what I'm doing.
It is not.
When's the split? 17th. On the 16th, I'm buying a share. I'm getting 10 more.
Well, so that's the only thing. If it's over 10 or if it's over 1150, then what's happening is that this will have become support again. So this is the flippening break of structure 1041. Does that prior support that is near-term resistance, does that turn into future support? So, I mean, maybe you get a pullback to, what is that, 1100? Just buy it at 1100 then. You see 1100, just put an order in.
Okay, that's what I'm going to do.
Yeah.
Oh, that's it. We're done. All right, that's it. We are done.
You tried to sneak 3. Okay.
That's okay.
So you going to see the dentist?
No. I just, dude, I gotta go somewhere, and tomorrow I gotta go somewhere as well. So it's getting a little busier in the afternoons, but
yes,
that's it. Thank you everybody for being here. What did you say?
It's the beard, man. I'm gonna wait. Braids are coming out. Do you go to the barber? Do you have the barber do the beard with the straight razor for you?
I need to learn how to line up my own beard, but the barber definitely.
Dude, I'm never gonna be able to have a beard like that, like ever. Like clearly, I mean,
dude, I started growing a beard when I was like in 7th grade. Like this has been a long time since I've been able to.
I will never have a beard.
With a great beard comes great responsibility.
Maybe I might be able to get one of those like with Fu Manchus. Could you imagine? Like a whoosh. I could probably do that.
All right. Yeah, weird. Also, when I lose weight, I think the beard's gonna look even, because right now it looks a little chubby because there's like my cheeks are big. Once I like start losing some weight, it's gonna look nice.
Is it? Did you get a new girl and you're just like, it's the eating season? Are you preparing?
Dude, I've had like 5 new girls in the past week, dude. So
at once,
it is.
Dude,
yeah, I can say that because no one believes. Like literally, I can say whatever. Like I can say, and no one believes it. So literally, it doesn't matter. Like it could be true, it could not be true. No one's gonna believe it.
You know.
All right, that's it. Thank you, everybody. There's Jason's YouTube and his Twitter. Again, he comes on every Friday to really help us out with this TA. We got through almost 40 tickers today. I'm sorry if we couldn't get to yours. We tried to get through as many.
Yeah, we try. If you miss some, I do a show on Mondays usually. On Monday, I'll hit some tickers. I do like the market, like I do a weekly trade plan. So that's what the YouTube is. Stop by. It's actually immediately after Amit's morning show, not on purpose. It's at the lunch hour. So that's my break time.
It's a good setup for the week. Like when I tune in,
Yeah, that's me and my crew getting set up for the week, checking out some trades, what we're looking at for this week, headlines, and Evan from Stock Market News has been hopping in and hangs out. But yeah, it's all good.
Okay,
follow Adrian Steve. Yeah.
Before you leave, Steve is live right now, and usually when he's live after me, we end up spamming his stream with something. So I'll give you the word.
That's
what do
the
you
Twitch
think
thing.
Yeah, we're gonna raid his stream. So what do you think we should spam? I'll give you the word.
Soy milk.
Soy milk?
Soy milk.
Okay.
It's an upgrade.
There it is.
Or
Steve's
just
YouTube in the chat. Soy milk, baby. That's what we're spamming. Look at that. Look at that coming in.
Dude.
Last time we did Costco and it was great.
Costco.
It was great. All right. If you want to check out Steve, there's his YouTube right there. We'll be back next week with me and Jason. And
yeah.
Keep going from there.
All right, guys. Appreciate it.
Thank you, everybody. Appreciate you guys. See you tomorrow on the Market Open. Bye, everyone.